Hello everyone, welcome to another live stream. So this one is a bit later. James could not stream today, so we had to move it 1 hour later, or maybe even more. No, it is 1 hour later. So yeah, that's the reason that we're starting at the current time. Today is CPI. I would say very important number, maybe the most important number for this month, because we don't have a Fed meeting. We had the NFP. NFP is important, but NFP is not really connected with the Middle East. Now, the CPI inflation is directly connected with the Middle East. So, what I want to do for today, is I want to see, or I want to do a workshop, okay? I want to show you how you can structure a position going into a newsprint. In this case, the CPI. So I'm looking to buy the Aussie dollar right before the CPI print. I'm betting on a lower print than expected. So I'm betting on cooler inflation. Let me share with you my thoughts. I think this could be pretty beneficial, and it kind of can give you a bit of an insight of what is the process like of building such a position. James felt off yesterday. Is he doing okay? Yeah, he's doing fine. I think he's traveling, so that's why he's not streaming. And look, sometimes like we stream 5 days per week, 2 segments, and you ain't gonna be at 100% every single day. I have days when I'm super enthusiastic, like today, and then I have days where I just want to shut off the stream and go and take a nap. So I'm human, just like everyone else. We have bad days, good days. We lose money, we make money. Usually when I'm making money, I feel great and I can produce some great content. And when I'm losing money, well, I don't feel so well. But that's normal. Let's start. So let's open up the Forex calendar. For the Forex calendar, let me see how many viewers we have. For the Nick channel, we have 189. Awesome, amazing. So core CPI, CPI month on month, CPI year on year, that is the news. It's gonna come out in 1 hour. So you see current time, my time is 13:32. And the news will come out at 14:30. Now, most of these events, what I do is I check what is the forecast on the Forex calendar. It's 3.4%. That is what the analysts think at, let's say, Bloomberg, Reuters, and just general people that forecast the numbers. And the number is lower. So the number is lower than the previous number. Now, this number is not so accurate because those analysts that work at Bloomberg and Reuters, they don't have real money on the line. They don't have skin in the game. So they tend to do a bit of a worse job. Their motivation is much lower to find the real number. They are afraid to put out the crazy forecast because if they're too far off, they can get fired. They can lose their reputation. So there is reputational risk. That is why they usually do a kind of a small deviation of the previous number. That's usually their forecast, and they don't want to stand out. Now, where you can find a much more accurate representation is on betting markets. So Polymarket and Kalshi, okay? So on Polymarket, this contract is called July Inflation Annual. On Kalshi, it's called Inflation in July 26. What is key is the signal is reliable if there is a lot of volume, okay? If there's a lot of volume here, that means the signal is reliable, right? If there is like 50K of volume, that's not really a reliable signal. For this one, we have $618,000. The highest percentage is for 3.3%. Yes, there's 40% for 3.4, but 44% for 3.3. So Polymarket is saying that the year on year will actually come out even lower than what the analysts are saying. Kalshi is kind of similar. I don't know where I can find the volume here. I'm not really familiar with Kalshi too much, but you can see that there's a high chance that it's above 3.3%, but above 3.4%, there's only 25% chance. Okay, so this is the contract. What the betting markets are telling me, what is this? What the betting markets are telling me, inflation will probably be around 3.3%. That's the most reliable signal I can get. And you can see we kept flip-flopping from 3.3 to 3.4, but still, if it prints at 3.4, that is still a lower print than the previous number. So what do you think? What would be a good trade if we're betting on cooler inflation? Put it in the comments right now. What would you do if you were expecting a cooler inflation print in the next 1 hour? I'm interested to see what you guys would trade. I know what I would trade, which I'm going to tell you a bit later, but I want to first see what do you guys think. So I'm gonna give you some time. It can be gold, it can be stocks, it can be the dollar, it can be something completely different. Okay, so what do you think? And the mechanics are, cooler inflation means that the Fed can be more dovish. Okay, the Fed can be more dovish. 16th of September, you can see the market is pricing in possibly a rate hike. By the end of this year, the markets are pricing in at least one rate hike. And if you get cooler inflation, well, then rate hikes are off the table. So you get a repricing here, repricing. So we have spike, sell, gold, bearish, sell UJ, buy AU. Yes, I think that's good. Buy gold, gold upside, Nasdaq upside. Sluggy says Aussie dollar longs. Yes, that's exactly what I'm thinking. Buy gold, sell USD, buy stocks. Cooler inflation means gold and stocks up. RBA was hawkish, gold up and dollar down. Could you create a poll for that? I would, but I don't know how to create a poll since I'm on the StreamYard app and I'm not on the YouTube app. So to create a poll, I would need to have access to the YouTube channel. I just have the access to the StreamYard. So not today, but we can do a poll in the future. My personal pick is to sell the dollar. So yes, you can buy gold, absolutely. And that is a valid strategy. It is a valid approach. But I would rather play the dollar. So I would rather sell the US dollar. Now, the next question is, what should I sell the dollar against? You can sell the dollar against gold. Yes, absolutely, because gold is quoted in dollars. So that is a strategy. But I would rather do it through a currency. Euro dollar, euro is not so great. The pound is okay. It's a good candidate. New Zealand, for the New Zealand, you have a bunch of rate hikes priced in. I think that is a mispricing and New Zealand dollar will lose value in the future. Dollar Swiss, no. Swiss is pretty weak, I would say. Dollar CAD, no. I think the CAD is a weak currency as well. USD-MXN, you can go exotic, which is something that personally I wouldn't want to do. But my pick is the Aussie dollar, okay? Now, the question is, why? Why the Aussie dollar? Because the Aussie, in my opinion, is bullish. You had the RBA meeting. The RBA cash rate was yesterday. Forecast, same as the previous number, actual number, same as the previous number, but the forward guidance, the press conference was hawkish. There were 4 dissenters, 4 voters that voted for a hike. Anna Brennan, let's see, chairman of, what is the Bank of Australia? Is it RBA? Yes. Okay. So Sabine Zucker, then RBNZ. Okay, I'm getting confused. Anyway, Anna Bremen. Okay, so she's the governor of the RBA. Sorry, for the RBNZ. I mixed them up. Anyway, so not the RBNZ, but the RBA. Okay, the RBA forward guidance was Sabine Sucker. Is that really it? Michelle Bullock. Okay, I'm gonna have to look into that after my segment. So the forward guidance was hawkish, which means Aussie should be a strong currency in the upcoming few weeks, or maybe this week. I just need this week, let's say. So let's say that I buy right now. I'm probably going to buy like maybe 20 minutes before the actual event, but let's say I buy right now. Stop loss, a good placement. You can do ATR. So you can look at the ATR 0.04, which means this would be a good stop loss level. But what you can also do is you can look at the last couple of times that you had the CPI print. So if you're not using AI for your trading, you're missing out. Okay, so what you can do here, list the US CPI print for the last 12 months. I need the exact dates. So let's look at the last 12 months with the CPI, and we're trying to gauge what is the move. How big is the move usually at CPI? So July 14th, we're not gonna do them all, don't worry, but basically 26 July 14th. Okay, so that was the CPI. So what was the move? Around 0.005. Not so big, not so big. June 10th. Let's look at 4 of them. So June 10. And again, here it is. So most of these are not going to be a big shocker. You know, most of these are going to be the same as the forecast. We can take a look at this one. So the core inflation year on year, pretty much the same as the forecast. So the move is not going to be that big, but still around 0.05. Okay, so let's look at May 12th. So we go to May 12th. May 12th, a non-mover. Yes, this was the inflation. So the inflation came in higher than the forecast, and the move was minimal. April 10th, that's going to be the last one. You get my point. Okay, you get my point. You probably need to go through all of them, but let's see, April 10th. This should be it. Yes, core inflation year on year. Okay, so it actually came in higher than the previous number, but lower than the forecast. You get my point. So kind of the medium move, I would say, is similar to the daily ATR. So the median move is around 0.005. So if we put the stop loss like this, we aim for 0.005 like this. That gives us a 1-to-1. That's actually okay. It's not that bad. I may trim the stop loss a little bit to something like this. So it's at least a bit positive in the reward to risk. And that's the trade, okay? So just to sum it up, we looked at what is what is going to be the most important event this month. It is the US CPI print. We looked at the forecast from the analysts. 3.4%, previous number 3.5. We compared the analysts to Polymarket and Kalshi, because on Polymarket and Kalshi, it's real money on the line. It's $500,000, so the signal should be more reliable. We saw that 3.3% is more likely to happen, so a cooler print. That is why selling the dollar into the event is not a bad way to go. Okay, that's not a bad way to go. And then we looked at the last couple of CPIs. We saw what is the average move in pips. You can also do What was the daily move in pips on AUD/USD on those dates? Okay, see? Now it's better to work with Claude because Claude should... Come on, Google Gemini. We seem to be having an error here. Let's see if I can refresh. Claude is better, okay? And it will be best if you can feed Claude the price action. So if you can get the tick data from the chart, feed it into Claude, and that's basically how you can do it as well. Let's see. So net daily move. Here you can see kind of the average out of this would be, well, around 30 pips, something like that. Yeah, but it depends how accurate this is because I'm not sure what kind of data Gemini has. Again, it would be much better to feed the LLM with the actual tick data. Okay. So also give me 1 second. I'm gonna go grab a glass of water and I'll be back. Okay. So that's the trade. I plan on taking it, well, maybe in the next 20 minutes, something like that. If you're in the A1 Discord, you will get the signal. If I do decide, again, this is not 100%, this is a potential. So at the moment, this is a potential trade idea, but if I do actually decide to take it, you will be notified in the A1 Trading Discord. You can join the A1 Trading Discord, and you can get the Edge Finder with a 15% off code, which is Marco. Okay. So all of the links, all of the information is in the description of the stream, or you can just Google A1 Trading Discord or the Edge Finder, and you will very easily find it. So use the code Marco, get 15% off. By the way, you can join the Discord for free as well. I'll post the link to join for free in the comments. So give me 1 second to grab the link. Okay, copy. Paste. So in the comments, you'll find the link to join the Discord for free. So you can join for free, you can test it out, see if you like it. And then later down the line, if you want to get access to everything, Nick, Chris Pulver, Iwind, Alan, and me, all of our trades, analysis, and much more, well, then you can become a paid member. Marco, what is your thinking choosing selling dollar over buying gold? Any professional insight there or just personal preference? I think you're going to get a cleaner reaction. I'm not sure about gold. Gold, in my opinion, already looks a bit overextended. Okay, so gold already looks a bit overextended, and it just doesn't seem to be the right thing for me. I prefer currencies. Currencies is where I take most of the positions. Oh, Swiss yen is actually dropping. Did we have anything on this one? Nothing much. Yeah, nothing much. No intervention. So I'm still in my Swiss yen position, if you're wondering. But I chose AUD/USD because it's a currency pair and I like the... Excuse me. So I like the Aussie, okay? I think the Aussie has potential. I think the Aussie has potential to go up. It's already pumping a little bit. So it's up on the day. I mean, that doesn't make any difference, but it looks fine. It looks good. Probably going to need to move it a bit higher. Move this a bit higher as well. Let's keep it at 290. 290 seems fine. This seems okay. And again, this is not a massive trade, so I'm not betting for a home run. I'm betting for a quick push to the upside, quick repricing, okay? Quick repricing for the Fed as well, because the market is still saying there's 48.1% chance of a rate hike in September. I would say that's not going to happen. I'm like 95% certain that that's not going to happen. So I would give this 95%. I would give this column 5%. That's how I'm personally seeing the situation. Mark, we got Fed, Trump, Scott working together to weaken the USD. You know what's up? Well, you can use that as a confluence. Fed dovish repricing, central bank gold buying accelerating, Asian buyer gold seasonality starting, investing put call skew, net short CTAs prime, edge finder score for gold of 8, gold up. I would like to buy gold, yes. So gold is on the watch list. I do want to get it, but I want to pull back. I want a better price. And if my idea here doesn't work, which it may not work, my win rate is only around 50%, so half of the trades I take are losses. The key is winners should be bigger than the losses. So if this trade loses, like this, well, it should give me a good opportunity to get in on a pullback on gold. Okay, pullback on gold. No, this is wrong, sorry. I think it's the 382 level. 382 would be fine. 200 EMA. So that would be perfect actually. If we can pull back to here, I'll take a stab long because again I'm betting on a dovish Fed. And the main thing, the thing that should move the markets the most, especially gold, is the dovish Fed. A Fed that won't hike rates. So that's what I'm playing. That's what I'm betting on, and I want to get a better price. Edge finder, top setups. Let's take a look at that. So gold, very bullish. AUD USD, bullish as well. So that's a nice added confluence. Okay, definitely an added confluence for me. Score of 6. That's pretty good. So I like it. I like it. Give me just 1 second. So the hike is never going to happen. Chinese and US data also really bullish for gold. Prime brokers buying gold. What time is or was the CPI print today? Well, let me show you. So the CPI should be in 1 hour. No, sorry, less. Current time, my time, is 13:54, and the CPI is at 14:30. So in half an hour, pretty much. Give me just 1 second. Wallout says, good morning, Marco. Isn't the stop loss a bit too tight by your measures? Well, maybe I should make it a bit bigger. What is it? 41 pips. Well, according to this table, the average is around 40 pips. So I think it's fine. Should I sell gold? Wait for the dip. Silver is going down. Hike is not happening. It's in 36 minutes. Are you in Africa? Nope, I'm not in Africa. I'm in Croatia. We're actually in the same time zone, go figure. Maybe below the swing low. Maybe, yeah. Below here. Could be a good level, yes. That's not bad. What is this? Ah, that's the NFP. Ah, okay. So 5 more minutes until the end of my segment. Basically, what I have for today is I have a Swiss yen short. I have the Aussie dollar, which I do want to buy. And I have gold. For gold, as I mentioned, I'm looking for a pullback. Stocks are doing pretty much nothing, so they have been super flat. I have been trying to buy some breakouts. So I'm in RHI. Basically, the strategy that I'm using is a simple flag, pole and a flag. So pole, flag, and then a breakout. This is the pole, this is the flag, and that's your breakout. Right there. So the breakout happened. I bought a little bit after because I missed the initial breakout, and now I'm in this. PANW is something I do want to get into. Okay. But I'll probably have a buy limit. So you can see current price is 383. I think my entry level, a good entry level for me, would be at 376.43. I can have a tight stop loss in that case. The rule that I have is the stop loss should go below the low of the day. So if this was the breakout candle, the stop loss goes right below the low of the day. Okay, and the stop loss size cannot be greater than the ATR. So if the ATR is 15.6, the stop loss needs to be below that. So in this case, 13.48. That is a good stop loss level. That is fine. Okay, let me just send Alan the link. Copy. Okay, so I think Alan is going to come after me. Let me take a look. You can always find the schedule for the stream. You can find it on the A1 Trading website. So you go to A1 live stream schedule. Is the ATR average trading range? It is the average true range. Or maybe it's called the average trading range. I know it as the average true range. Yes, so Alan is coming on in 2 minutes. Okay, great. So I have 2 more minutes. I want to remind you, if you want to get access to the A1 Trading Discord or the Edge Finder, links are in the description. You can get 15% off with the code Marco. Okay, so Edge Finder, absolutely recommend that. I use it every single day. I use it for building a trade idea. I use it for the top setups page, an absolute game changer for retail traders. So if you don't have it, definitely do consider getting that. If you want to get all of my trades, all of the ideas, all of the signals, well, you need to join the A1 Trading Discord. AU is probably coming up in there. Nothing has, I mean, it looks to me like a good trade and worth the risk. Maybe not the full 1%, but let's say 0.25, 0.5%. That I would risk that on this one. Okay. So that's about it from me. Do not go anywhere because you have Alan coming on. Thank you very much for watching, and you can catch me in the second segment. Okay, I'm going to play a quick transition and then you'll have Alan. So thank you and goodbye.
If you're looking to get funded and want to save big on prop firms, check out our website, a1trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday, we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Good morning, everyone. I'm going to do one thing here real quick. I'm going to drop this link for you guys. ACAP is running a special right now, 20% off welcome bonus for a limited time. You could also scan the QR code right there, right under me. If you guys would love to, if you guys are looking for a new brokerage, go ahead and check out ACAP. It is a very, very good one. But good morning, everyone. Good evening, good afternoon, wherever you guys are watching today. Today is the big one. It is the much anticipated CPI, followed by tomorrow PPI. So it's going to be a big day for inflation. How are you guys doing? You guys ready? I got my flip-flop beans here ready to go. Much needed, much necessary. So we are all good and ready to go. Good morning, KDX. Good morning, Timo. Ball out. Good to see you, my friend. Let's get started, shall we? What are you guys' thoughts? Hot, cool. I kind of like the idea of maybe seeing some pullbacks in gold. That way we can get some of the hands shaken out of there. Maybe I can take some profits and then look to re-enter the position. So we'll see what happens there. If you were to get a cooler CPI, likely gold just continues chugging higher there. And then I just continue trailing my stops. I'm looking at the 200-day moving average, guys. But here's the thing. I have my take profit level right there at that 200 just because it's like resistance, right? It could be a level where bears go ahead and step in. But I'm going to move the take profit higher because I obviously want to see what happens. Is this a trending market? Is the trend, changing for sure? And if that's the case, then we would break above the 200. So just so you guys know, I'm not looking to just take profit here. If the trade continues to give, then I'm gonna let it do its thing. So that's what I'm looking at for gold there. If we were to get a hotter CPI, then likely we get a little bit of a pullback opportunity. I get taken out of the market, and then I can look for re-enter opportunities. I really like 4,200-ish area. If I put a fib from high or low to high, the 61 and the 50 is right between 4,225 and 4,200. So I love that area. So we'll see what happens. But that's kind of what I'm doing there. For gold, the market's pretty much pricing in, or not pricing in, but the market's trading as if we have a cooler CPI. You have a little bit of softness there in the dollar. You have yields lower today as well, which is really interesting. We have risk on, you have equities in the green today. So it seems like and obviously gold is up 1% right now as of speaking. So it seems like market's kind of positioned for a certain way. So yeah, we'll see what happens. Let me see what you guys are saying there. Good morning, Max. Buy the Nas? I actually don't think so, my friend. I would need something bigger. I would need a really big pullback for me to justify buying the Nasdaq. Like at this point, we were getting very close to that 200-day moving average, and we didn't get it. So it's just kind of one of those things where you just got to wait and be patient. Yes, I got the flip-flop beans. Full port short on gold, just joking. Full margin. This is the time, guys. This is the time where we go full margin. Just kidding. Don't do that. That is how you get hurt. Everyone loves to trade, or everyone loves to like full port CPI. Like that's a method, that's like people love to do that, but very, very dangerous. Don't do it. Lots of volatility. Is the A1 website under maintenance or something? Mine's not working. I don't think so. Let's see. Should not be A1trading.com. Nope. Looks pretty good. Maybe you can try clearing your cache, or maybe going like in a different browser just to test it out, incognito mode or something like that. But everything is working nice and dandy there. Okay, so let's talk about CPI real quick, because it'll creep up on us, because usually these live streams fly by, man. So we've got about 25 minutes or so, and then Nick will be joining me as well halfway, so we can go ahead and talk about it. But core CPI month over month is looking to tick up slightly. Core CPI year over year is looking to tick down by 0.1%. CPI headline month over month is looking to graze up there again to 0.1%. And then CPI year over year is looking to come down to 3.4%. So we'll see. We'll see, guys. What do you guys thoughts? Are you guys thinking hot print, cool print? Do you guys have an opinion? Do you guys not care? You guys just being data dependent? I would love to know your thoughts. Gold will melt. Gold will melt. That's what you're saying, man? That'll be nice. If gold melts, it presents a pullback opportunity for a lot of people. Are we getting the gold bugs coming in? Gold buy or sell? Let's talk about it, because I'm sure you guys are scratching or looking to scratch that itch. With gold, gold is not a fan of inflation, right? Gold is not a fan of inflation because it raises the questions that the Federal Reserve or central banks raising interest rates, it's not good for gold, right? Gold doesn't yield anything. And so when you have elevated inflation environment or high interest rate environment, people go from trading or being in gold where it yields nothing to maybe putting their money into another safe haven like the US dollar that yields more, right? But in this case right now, we got to take a look at the context here. So it's kind of tricky. And I would love for Nick's input here when he gets on here. But basically, you have an environment where, yes, if you were to have elevated inflation, right, that could be problematic for gold, maybe in the short term. But if we just look at it from a holistic view and look at what's going on, right, the Fed has a dual mandate, which is maximum employment and stable prices, right? If they were to prioritize one or the other, I would say maybe they prioritize labor right now. And so in that case, even if you were to get an elevated inflation print, they would still be looking to save the labor market. And the way one would save the labor market would be by cutting interest rates. But usually if you have higher interest rates, higher inflation, that's bad for gold. That's why you saw this right here, this whole move downward, right? The war in the Middle East, you had oil prices elevated, you had yields elevated, and you had basically the money printers were getting shut off, right? You can think of it like this. If you are thinking in the framework or thinking of rate cuts, that means the money printers are turning on. Gold loves that. When you think of higher interest rates, right? Rate hikes, that means money printers coming off. That is bad for gold. So right now you're kind of in that. And then obviously if you were to just get a flat out cool print, well, then that would be very bullish for gold. That is more thinking of in the framework of like, okay, money printers may be coming on, especially if you have cooler inflation and then jobs market is not looking too hot. That could be an easy justification to go ahead and flip from hawkish to dovish. So he says, Alan, I would like a cooler print. Me too. Me too. For sure. For me, the market is overpricing the job report and undermining the previous data we got for the past month. Labor, stable, inflation rising. So we were like, I remember saying, you know, not the last NFP, but the one behind that. I remember saying like, that's just one data print, right? We need to see more to really see if we're going to see a complete flip-flop from super hawkish to maybe neutral. And now we got the second one, right? The second one out the way, which is the previous NFP print, which was also bad. So, and also too, the provisions were lower for the one behind that one. So you're starting to see a bigger case to be made for, you know, at least staying neutral in interest rates. And I've been pretty consistent with that as well. Let's see. Crude oil buy or sell. That one's tricky. That one's tricky because it's all based on the recent price swings have all been based on the war in the Middle East. And that is very unpredictable. I mean, today we saw something along the lines of Iran saying there are no discussions at all. And then you have the U.S. saying there is discussion. So with crude oil, pretty tricky. really wouldn't make a decisive call and commit to it. I would say if you were to get, I think the easier trade would probably be if you were to somehow get some relatively low prices, right? Like let's say $68 or $64, somewhere within this range, then maybe a buy opportunity just because you have so much uh, room to capture on the upside there. If you were to get another whiff of volatility or whiff of escalations, that's kind of what I would think. But I mean, like similar to gold, right? Like when I got into this trade, I was like, look, assuming this is the bottom, you're getting relatively low prices, and then you just have upside potential if things start to look better for gold. With oil, kind of same thing, right? If you were to get some relatively low oil prices, looking at referencing the recent price action, then maybe I could justify maybe getting into oil. But right now, it's not the thing, man. Like, look at this. You're kind of like in the middle here of this zone, of this big zone. You're at some resistance. It can go either way. It can break out. It can break lower. That's a tough trade. That's a really tough trade, to be honest with you, crude oil. And so that's why I'm kind of staying away from that. But it's a very important chart in this time for sure, because the oil chart will tell you a lot of things about other asset classes. It will tell you about, it'll give you clues for gold, for yields, for the US dollar. So although I'm not trading oil, it is very, very good to look at so you can answer a lot of questions. Roop says, I think CPI might be soft. Could be. If it's cooler, why will gold melt? Melt to the upside. So if it's a cooler print, that would be very bullish for gold. Lower interest rates, probabilities go up, and gold loves that environment. Let's see. Euro USD sell? Maybe. I'm in a long position though on euro dollar. It's been pretty flat these last couple of days though. I'm not gonna lie. If you were to get a cooler print, then likely you see some softness in the dollar. Maybe that gives us the bump up to that 200-day moving average on euro dollar. And if it becomes if a hot print comes out and you get some strength in the dollar short term, likely I get stopped out for break even. So you can see right here my stop loss is where I entered at. I trailed it to there. So it'll be a nothing trade, but we'll see. This is your sign to whomever reads this. I love this. I'm going to keep this up here for a little bit. This is your sign to whoever reads this. Trade after CPI release, not before. Yoshi, you're the GOAT, man. You're the GOAT of the day. I'm going to keep this on for a little bit because we are going to get a whiff of viewers here, especially as we get closer to the CPI release. A lot of people love to step in and just kind of get some insight, see kind of where we're going, like buy or sell, like this guy right here, buy or sell gold. Let's go ahead and just pay attention to this, what Yoshi said right here. Trade after CPI, not before. Not before. Preach. Yes. What does cooler CPI, what does a cooler print mean and a hot print? So cooler means lower than expected and hotter print means higher than expected. It's just trader terms. So, yeah. Been holding gold buy since morning. How much did you risk? I mean, how much would have you lost if the gold trade would have hit stop loss? About 4K, 5K maybe. And now since then I've been trailing stops along the way. Bitcoin is surging high, so that's a sign of a cooler print. Yeah, what's Bitcoin doing? Let's see. Bitcoin has been doing a whole lot of nothing for me, guys. I've been waiting. I've been patient. We've been flat. Like you can see this right here. We've been flat for a little bit. I am waiting for that 200-day moving average, though. I'm looking to tap into that 200. And if we do, then possibly I may be looking to short some Bitcoin. But we'll be patient here. No need to jump into it. Lots of things happening. Lots of opportunities elsewhere. So I'll be watching Bitcoin, though. If the data comes out mixed, there could be a whip down or up to down. So yeah, for sure. That's why it's important to wait and see. You don't want to front run a position, man. If why? The pullback will come eventually. That's what I'll say. Hey, Alan, can you prove your background isn't AI? My girlfriend keeps teasing me. Marco has a real desk, but Alan has an AI background. How would I prove that? This is a book. The Great Financial Crisis book. It's not AI. Go through the wall. Yeah, let's not do that. Okay, let's see. Nick's coming on here to join me, give his thoughts and opinions on CPI. We're watching together. Nick, good morning, man. How are you?
Morning. So what people don't know, and will now find out, is that Alan isn't actually a real person at all. He's actually completely AI. Not only his background, everything you see, he's the brain of A1 Trading in AI form, the entirety of our stream in human form.
I wish I was that efficient, man. That would be awesome. Maybe
you do have a really nice background, though.
You think so?
Yeah, looks great.
Oh man, thank you. My Alize said it was too brown at one point because we just painted the whole thing brown, but then as things started to come together, it looked better. But I want to get some greenery in there, so like a plant like how you have there in the background. That'd be nice.
my solo plant. It's hard. Backgrounds are actually so. I've changed my background like so many times over the years, and it's like what I found. Long story short, for anybody who wants to go try and be a content creator, simpler just is better. Like what you have looks so nice because it's just a dark, simple background. Like I'm trying to do something similar. Like we have the dark. Anyways, this is off topic, but this is all part of the being a better trader lessons here. You got to get your background right, even if you have nobody watching you.
And less is more. But dude, with AI now, I don't know if you've seen this, but and we're diverging a little bit, so I'm aware. But with AI, there's like these applications or whatever where you can literally change the background like to something ridiculous, and then the lighting adjusts with it as well. It's insane.
Yeah,
very, very cool.
Yeah, there's so much you can do. Alan, you've got a trade that I am super jealous of. Also, if everyone could just let me know if my mic sounds okay, if the audios are good. I've been struggling with it all week, but hopefully it is better. Anyways, Alan, you've got the trade that I'm jealous of. That gold long looks so good. And I heard someone say, okay, someone said my gain is too high. Okay, let me actually, 1 second. I think
when you entered, it was wonky, but it should be good now. So
let's try. We'll okay, this might be better. This might be worse. Let me know if this is. I might be quiet now.
Might be. Yeah, you're slightly quieter.
Okay, and one more try here. I'm going to turn off auto, and I'm going to maybe this is good. That's looks good on the audio level. You guys, let me know. Yeah, so Alan, this whole CPI kind of lead up has been really interesting because you've had this situation where I've been kind of pointing out on the economic growth and job side of things have been kind of slower than expected recently. And why that matters, why that's interesting to me is that like, okay, if you have jobs data sort of weak. I mean, NFP was much weaker than expected. And then you have economic growth that's a little bit slower as well. It almost, to me, like it doesn't matter too much what the actual inflation number comes out to be. And I think what makes that interesting is that I think you could make a case today for gold on the bullish side that's like, okay, if inflation is higher than expected, you could say stagflation because you have economic growth a little slower. And if you have inflation come in softer, then you could cheer the idea of less rate hikes being priced into the market. And I heard Yoshi, the person in the chat, say earlier, trade the aftermath of CPI. I would argue you could also trade the buy the rumor, sell the news side of it. I think actually trading the spike is the worst component or the worst way of approaching it. But you've done a really solid trade here with the buy the rumor side of this. And of course, we don't know if it's a sell the news, right? It could actually be a buy the rumor, buy the news. That sometimes happens too. But the point is that backdrop, that setup this week was really, really strong, obviously with a little bit of hindsight here. But what are your thoughts on that?
There's definitely been lots of momentum built into it, behind it. And when I got into the trade initially, Nick, I wasn't thinking that we were going to get a cooler or a softer NFP print and then also some softer inflation reads. It really wasn't the case. Like I couldn't have predicted that. It was just a combination of good technical value. The edge finder was starting to be bullish, and edge finder is very, very good at catching gold. So give it to you there. Lots of things, right? You had some sentiment reads as well, and you had just a initial whiff of U.S. fundamentals kind of cooling off a little bit there. And up until last week, this week, you're starting to see just continuation of U.S. economic figures just not being what it was once. So that's giving that momentum to gold. And I also do like the idea. I was listening to your video. Basically, right, the Fed has that dual mandate of maximum employment and stable prices. And so in the event that the Fed has to choose one or the other, right, I would think they would choose the labor market. Wouldn't you agree?
I would agree if it gets weak enough. I think right now you could argue that, yes, I agree with you. I think that if you're looking at this situation from a, do they care more about jobs or do they care more about inflation? Well, inflation at 5 or 6% gets their attention and it's terrifying to them. But if inflation's at 3s to, let's call it 4s, and then you have jobs that start to persistently come in negative, I don't think you're going to see them hike rates. Like it's a hard one for me to justify, like, yeah, they're going to hike rates into a labor market that is weakening. Last week we had non-farm payroll come in worse than expected by 108,000 jobs. ADP came in worse than expected by 24,000 jobs, and JOLTS job openings came in lower than expected. I'm not necessarily saying like, oh yeah, the US economy is going to fall off a bridge. But my point is, I think you've had gold for specifically, we're just talking a lot about gold here right now. Gold drops 30%. People price out the possibility of rate cuts and think, hey, rate hikes are coming down the pipeline this year. Well, yes, but then if everyone is expecting rate hikes, no rate cuts, if now we've flipped in sentiment on the interest rate story, then what starts to become interesting to me is, wait a second, if the jobs market's slipping, they're not going to hike rates, in my opinion. And if they do, it might sort of be a one-time insurance hike. We've seen that before from central banks, like, hey, we're just going to try and stay in front of this, but we're going to, this is not a hiking cycle type of thing. Anyways, I think that the risk reward stays good for gold bullishness. We'll see if we're right about that. I am looking for pullbacks. I know, Alan, you are already long gold. I am looking to be long gold. If we were to get retracements, if you see CPI come in hotter than expected, I do think it probably puts short-term bearish pressure on gold. But my personal opinion is that retracements on gold are buyable dips. As always, not financial advice, just my thoughts and opinions. Would you agree, Alan? I mean, like you've already got, I saw what you're doing with the trade. You're trailing your stop. You've got a target on. How do you play this? If you get, let's say you get a weak print or a high print and it sends gold lower today, you get stopped out. Are you looking to re-enter fairly quickly? Would you wait for a retracement? Like, let's just say you get trailed out. What are you doing next?
Oh yeah, I'm definitely very open to that. I would love that too. It would be a chance for me to just solidify something, right? And then just re-enter. So the way I would approach this is, the obvious is if you were to get a cooler CPI print, you would just see a continuation in gold. And at that case, I would just continue to just trail stops at structure. I have this level here, this take profit level at the 200-day moving average. That's kind of where I would see longer term, maybe resistance. But again, I'm not married to that take profit. If it continues to just drift higher, I would just let it run and do its thing. But you asked the question, what would I do, right? If you were to get a hot print, I would be very happy actually to get taken out of the trade here, solidify some profit, and then like similar to you, just wait for a pullback opportunity and re-enter the trade. Pullback levels that I have in mind, I think we can all agree here. The way to go about it would just put up a fib, right? So a fib from low to high, you put us there. You would get the 50 right around here, the golden zone, they call it, between the 50 and the 61.8 will be at 42.25 and 4200. That lines up right there with this level right here. So this is kind of the preferred level that I would look for as far as buying the dip on gold. So very, very simple the way I would manage this trade.
Makes sense. Yeah, I think we're on the same page on that. You know, Alan, what I did is I took a picture of your trade. Since I didn't have one of my own, I took a picture of yours, printed it out, and I nailed it to the ceiling in my bedroom so that at night when I can't sleep, I just stare at your trade. It makes me feel a little better.
And then the first thing you do when you wake up is just see it.
I see it, wipe my tears, and then I get up and go about my day.
Well, Nick, the good thing is that this is all AI. This is fake. So you're in good shape.
Good. That makes me feel a little bit better. What about, I mean, I know we've got a couple minutes here. We've got 4 minutes before the CPI print. You mentioned crude oil. Are you watching anything else? Are you watching any currency pairs right now?
It's been kind of mid, man. I mean, so I'm in euro dollar long too. Really doing nothing though. It's been sideways for a very long time. So I would hope, right, fingers crossed, if you were to get a cool CPI print, that would obviously help the gold trade. But that would also help this euro dollar trade here. If you were to get a cooler CPI, likely get some softness in the dollar, and then you can see a drift higher in euro dollar to this 200-day moving average level here as potential support, also right here on the left. So that's what I'm looking at. But honestly, on the currency side of things, maybe not the best, right? Like we know this, that attention usually shifts around, right? So the safe haven inflation dollar trade, right? This thing is starting to not look as appealing, and that's fine, right? So that's why you're seeing some eyes shifting onto the metals market as it's starting to heat up a little bit. I actually wanted to ask you, so we know like the stagflation implications on gold, right? But another very popular asset class that would be very affected, I would say, would be like the equity market, specifically the Nasdaq. I wanted to kind of pick your brain on that as well. What do you see happening there, either direction, cool print, hot print, stagflation or not?
Yeah, I think with gold, where we kind of have that stagflation or less rate hikes, both of those scenarios being somewhat, I would argue, a still bullish environment for gold. For equities, a little bit different. I think stocks, obviously, they just want to see lower inflation. If you get a good print today, I think it continues the rally. The rally has been, so solid, so resilient across so many different places. If you're watching stocks, it's kind of been nice to see some participation across a lot of different sectors, a lot of different areas within the market. You do have tech rallying, which of course is always kind of a necessary component to a broad rally. You get the tech generally leading most of the time, up or down. The Dow Jones has been reasonably strong. I think that, when it comes to the inflation report today, stocks want to see that we're not going to get some sort of giant blowout in the 10-year yield. They don't want to see bond yields fly higher interest rates. That does start to weigh on the consumer. And as the kind of lineage goes, if you have higher interest rates, that starts to bog down the ability for consumers to spend money. If consumers can't spend as much, corporate earnings hurts. They let go of people not have jobs. Like it can be a negative cycle. So I do think that interest rates are a very important thing to watch. I would argue that the number one component or potential risk to equities is yield right now. I would say, obviously, that's kind of attached to Iran as well as just the inflation story. Like if you get, Iran situation continuing to be problematic, and or the Fed just decides to be more aggressive on inflation, those are things that I think would be problematic for stocks. So I'm very much on kind of the neutral side of things when it comes to trading the indices right now. There's individual stocks and sectors that I like, but yeah, we'll have to keep an eye and see what the inflation report brings us. We've got about 1 minute to go here, Alan.
1 minute, man. We'll see what happens. I will say on the yield story there, they are softer on the day leading up into the event. So we'll see if that continues or not. Ballard asked me the question yesterday, like at what point does the 30-year become problematic? Like you're getting to those 2008 levels there. What's kind of the kind of case there? I know we have the CPI print too coming up very shortly, but anything on any opinions on that, on the 30-year and kind of where it's at?
I feel like it is more the pace that yields are moving than it is the absolute number. Because I don't think we're not like historical highs for yields. Yeah. But if they start to blow out, like if you start to see like the Bank of Japan, the JGBs flying higher, that happens in the US, I do think that's going to weigh on equities. Guys, we got the CPI report. Let me just see what we've got. I've got everything pulled up on the screen for us to watch. Let's see what the CPI print brings.
Let's
Stocks
see.
are leading higher here. Dollar is lower there on the print.
3.4.
3.4. So that is as expected. Gold, little bit of a mixed response. Stocks popped, then dropped. There may be something. Hey, Alan, what's that core CPI? Because that's the other side of this. It's kind of
They all came in line. So core CPI year over year 2.5.
okay.
Core CPI month over month 0.2. So everything is in line with what I'm seeing here from my data feed. So we likely will just see a choppy, ugly type of reaction. Yeah, nothing out of the ordinary there.
Yeah. Any does that change anything on your radar in terms of biases, setups? Obviously, still in gold. Any other kind of thoughts on that?
Not really, honestly. Again, I'm very open-minded and would be very happy to get taken out of the trade just for the standpoint of like securing something and then reevaluating it and entering once again. But we'll see how the market digests this. I mean, yields were red today. They're picking up a little bit, so it's kind of to the opinion of what the market is thinking. But if it's kind of where it's at, I mean, you know, technically inflation is trending lower. Let's hop to the edge finder real quick and see, right? So previous one was 3 point, let's see, hold on. Where are we at now? 3.4 year over year. And the previous one, it was at 3.5. So you are starting to see a little bit of a stair step lower. Now, is that a dramatic stair step to where the Fed goes from super hawkish to extremely dovish? Probably not. Maybe you're going from just hawkish to neutral. But I think still that case is somewhat bullish for gold. I mean, I would say it is bullish for gold. So let's see. So edge finder, let's go to economic data. Here we'll go to inflation data. And this will be the last thing I touch on. I'll hand the baton over to you, Nick. But right here, you are at 4.2%. The recent one was 3.5. And this recent one that we just saw right now is 3.4. So you are starting to see a trend lower there in inflation. So I would say that's bullish for gold. Now it's up 1% on the day. So maybe this is just a continuation play.
Solid.
Yeah.
Looks good.
And we'll just see. I'll just keep trailing it, and we'll see what happens at the 200-day too.
Yeah, for sure. Well, solid trade. Congrats on it. And gold is up 1%. Got silver up 2.3%. Alan, we're going to throw the show. We actually have a new guest today, which is exciting. So stick around for a little bit if you want to hear from her. We have broken the trend. We've had a lot of dudes come on the show, so it's nice to finally have a lady coming on to share some insights, and she is a macro fundamental trader as well. So this is going to be fun. So Alan, get out of here so that we can get on to that segment.
You got it, man. I'll be back soon. See ya.
All right, see you, Alan. Okay, so guys, up next we are going to be bringing in Marilee. She's going to be coming in and doing a little bit of analysis with myself. We'll play a quick break just to set up the background here, and then she will be on with me in just a moment. Stay tuned. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream. All right, guys, and we are back with Marilee. Hi, Marilee, how are you?
Hey, congrats on getting my name right. It's always pronounced wrong. It's amazing.
Well, I had to do a little research, but I think I got it, so I'm glad that worked out.
Good, I'm glad.
Yeah.
How are you?
I'm good. Thank you for coming on. And, you know, I mentioned this just a second ago. We are always kind of on the lookout for different traders who kind of trade in the same neighborhood. We are here a community of a lot of fundamental and macro traders. So when I saw your Instagram pop up, I was like, ooh, we definitely should invite her on. That's how we found all of this awesome crew that we have here on the stream. So welcome. Thank you for being here. And I'm curious, in terms of macro fundamentals, how did you get into that? And I'm curious, like, what do you trade? What is your general approach in terms of applying macro in general?
So I tend to trade equities. And it's
Okay.
kind of funny because I actually, when I first started getting into markets back in like 2015, I actually traded Forex as like my first kind of introduction, but I knew nothing about macro like at all. It was heavily just technicals. And I guess I just recently got into, not recently, but like probably over the past 2.5 years, I really started diving into macro. Um, it just got really clear to me that there are larger forces driving the markets and it's not just technical based. And I want to know what those are. And I want to be able to kind of prepare myself ahead of time instead of being reactionary. So it's been extremely fascinating to me. And it's like this ever changing puzzle. So it's funny because actually just recently I'm like, I really want to trade bonds. I would really like to trade, commodities and things like that now that I have a deeper understanding of them. But so I'm looking into like setting that up actually because how that would work best with like, typically I use, E-Trade brokerage for equities and stuff. But yeah, I'm looking into doing a little bit different in that.
Yeah, I love that. The bond market is like probably the most insanely interesting bond. Like it's weird because when I first got into trading too, I had no interest in like macro fundamentals. And the bond market sounded like the most boring old dude market I could think of. And now it's actually like one of the most interesting because it tells you so much about like monetary policy and economic data. But it is interesting. I think that's where a lot of the traders here who come on and share their thoughts about macro, kind of how they got into it too, is just simply understanding like, okay, there's something beyond just this chart, right? Just the technicals here. Like we're looking at candlesticks and everyone under the sun, when they first get into trading, that's how they start, is they look at like candlestick patterns and moving averages and indicators. And not to say that those things are bad or wrong to use, but that understanding a little bit of why and what's going on behind this can take you a long way. So you trade primarily equities. I trade a lot of indices and equities as well. What do you like? What's your general thing you're looking for? I'm curious. Like, are you more of a trend follower? Are you looking for, if you're kind of macro focused with equities, how do you apply that? Like to individual stock levels? Do you trade ETFs, sectors?
I tend to trade specific names. Like I'll do some indices and things like that. But a lot of times, like I like to kind of blend macro regime, like where are we at with the macro? What type of sectors or themes does that support? And then what names within those themes are the most beneficial?
I love
so
that.
like obviously the AI trade has been like the theme, you know what I mean? So a lot of tech kind of picks and shovels, things like IREN, where it's like there's power constraint and compute and things like that. So it's like that's obviously something that I like to, that's one of the names that I own shares in, but also like to trade. So it's kind of like a layered process of like, what is the macro supportive of? And then what theme benefits most from that? And so kind of trading it that way is what I tend to do most.
You know, what's interesting about that is I feel like most equity traders are bottom up, right? Where they look at like the individual company, they like the financials, they like the CEO, they like all the micro level stuff, and then they go higher up the chain. Whereas I think it sounds like you and myself, same thing, are more top down approach, where I'm looking at like, what's the state of the economy? What's the state of like, what are these bigger themes that are at play? AI, infrastructure build out, government spending, like those sorts of themes are like top down, where you then work your way down to pick individual equities. So I think that's really cool. You are more of a swing trader, right?
Yeah, I tend to hold my trades, and it's funny because like I have multiple time frames that I work on. Like kind of like you said, the fundamental traders. That's my approach to my long-term portfolio. Obviously, like I want to have companies that I believe in,
right?
That are attractive to me on a fundamental side. But then when I'm looking at regime, it's like, well, is the market supportive of this in the short and medium term? So like I guess typically my trades tend to be held for a couple months at a time.
Right.
So I swing trade options, but I'll buy. It varies depending on like how convicted I am with the move happening on a certain time frame, but usually 3 to 9 months out, and then I'll close it somewhere in between that window. But usually less than 12 months, around that 6-month range is kind of the sweet spot.
Very cool. Yeah, I love it. So are you, if you would like to, you can share your screen if you have any charts you want to show us. Either way is fine. Generally speaking, I am mostly like I'm a macro plus price momentum trader. I like trending markets. I like markets that are moving up to be buying, down to be selling. Are you generally similar, or are you more of a reversal trader? Like, are you looking for overbought, oversold type of stuff? Like, do you have a approach on that side of things?
I tend to lean in your camp. I like trending markets for sure.
Yeah.
Especially when obviously, you know, the macro is supportive of that, which, I mean, recently it's been kind of not that way. Like I've had some yellow flashing signals, you know, even with like, I know you guys just went over the core CPI print and, you know, CPI in general, which was pretty flat, which was positive, negative. But honestly, the thing I was watching most in that, after that print was the stock bond correlation. Just because typically, let's see, do I have a chart to share? Let me see.
Yeah, there's that little plus icon at the bottom on the StreamYard software, and then you can just share a screen if you'd like.
Okay, cool. Let's see. Pick which one it is.
Stock bonds. So maybe like SPY TLT. Is that what you're thinking? Or are you thinking?
No. So I watch, like, again, I watch the features. I don't know if you can see that. Is that?
Yep, we got it.
Okay. All right, cool. So yeah, just stock bond correlation of like, because, you know, when I'm looking at the correlation, I want them to be like the same category. So both features. So ZB is like, you know, the longer end, obviously.
Yeah.
But if equities and, sorry, this is like the screens are like to trip me out here, like sharing and then seeing the live. Because if yields are going up and equities are going up,
yes,
like obviously there's enough growth in the system for equities to withstand those higher rates, which has been the case for a while, right? At some point, high is going to get to be too high. Like we don't know where that is, right? At some point, the higher yields will pull on growth enough, especially for the long duration tech side, which is generally what I focus on, but it'll pull on it enough to where we'll start to see that correlation start to break, right? Yields will be going up and equities will be going down. So that, you know, obviously this would be positively correlated because, you know, the bond prices are inverted to the yields. But that's kind of what I'm watching for, is like, because we're getting to these, like this point where we're at, you know, really high valuations and, you know, things are just we've been in this bull run for a while. So it's like, I'm just getting cautious. Like I built up a cash position a couple weeks ago, larger than I normally have, just because I'm like, I'm going to watch, especially with the move index. I mean, I don't know if you watch the move index very often, but let me take this off now. But the move index has been really low, like over, you know, the past, if we even go back, like historically really low compared to everything that's going on with the macro. Like to me, that's it's a little sus.
Yeah.
It's so low.
Yeah. I generally, anytime the VIX is like super low or move either one, I just get a little bit more cautious on the being fully positioned I mean, I primarily trade in a cash and or margin account. I have two that I really focus on. And it's kind of the same thing. Like I'm sitting a little bit of cash right now. I feel like I don't want to fight the rally because it just seems like it never wants to end. But to your point about yields, I think that's a really good one, in the sense that, like, okay, if we're looking at a 10-year yield, a 2-year yield that are just grinding higher, generally speaking, they're down a little bit here today, which is good news for equities. But that was the question. I think you heard that right as we jumped into you jumped into the call, is Al and I were talking about, like, at what point does that start to get the market's attention? And I don't know exactly where. I just know that if it continues to trend higher, like, we could get really simple at this and just say, you know, watch your favorite moving averages. And I think that if this thing starts to break more decisively lower, like, that's obviously a more positive thing, most likely for equities, which, as you mentioned, like long duration assets, you know, borrowing costs are a heavy hitter for not just the consumer, but any sort of company that has long borrowing rates, like tech stocks inherently generally do. So it is a really interesting concept to study, the 2 and 10 year, also the dollar's another way of kind of keeping an eye on that, just to get an idea of where that might be going next. Do you have an opinion on, and it's the hardest question in the world, but in terms of like the Fed and interest rate hikes, do you think that they're going to hike rates from here? Or do you think, like, because right now, from what I can see, it's pretty 50-50 out there in terms of probabilities, in terms of whether or not we're going to get one hike or maybe a second hike by end of year. Do you have any opinions on that?
Well, kind of to that point, like it is, if you look at the policy, like rate path is essentially flat. Like they're pricing in like nothing 2 years out. You know what I mean?
Yeah.
It's like there's nothing really priced there. But if I had that chart, I would pull it up. I don't have it. but
next time, no worries.
So, well, and that's also to the part about the move index. That's essentially why it's been so flat, is because there's no expectation of much change. So to me, I'm worried less about a couple hikes or a couple cuts or whatever. Like it's more so the fact of whether or not it's going to be a surprise.
Sure.
Because the surprise itself, whether or not that policy path changes on something that's like unexpected, which Warsh is leaving the door open for that. He's saying nothing. Like he is like no forward guidance, like nothing. And so it's causing like, I don't know, I feel like it's causing a lot more uncertainty than is currently being priced in. So, I mean, I think there is definitely, obviously there's the supply side shock from the oil and Iran and all that stuff, which, tends to be viewed as transient with, central banks. But then on the other side, apart from this recent NFP print, we've had decently strong labor market. Earnings have been super strong. We've got, demand outpacing inventories. So it's like, it's not only isolated to the supply side, in my opinion. Like it's not a huge issue yet, but clearly growth and demand is not weakening. So that to me leans like at least towards a pause, if not a hike.
Yeah. No, that's totally fair. I think that watching the labor market in the last week and a half, let me see if I can just map out what I've got here. I would say in terms of the last, let me switch over to the dollar. This is this is our software that we use. It's a macro scanning software. It's called Edge Finder. And for that purpose of discussing the jobs market, I thought that this might be worth kind of just looking at. So in terms of where we're at from an absolute basis, like 4.1% unemployment rate is not any major red flag alarm bells. Weekly jobless claims came in this past week about in line with expectations, maybe slightly lower, which was positive. ADP came in a bit weak. JOLTS job openings came in a bit weak, and non-farm came in a bit weak. So I think that in the last like 1 week, we have seen maybe a little bit of a slower than expected situation in the U.S. jobs market. But they say, keeping an eye on the rolling like 3 month average of this data is also worth considering, simply because like one print doesn't necessarily make a trend. But I do think that it is fair to say like, okay, in terms of like economic growth metrics, we're still about on trend with a 1.5% GDP growth versus forecast, which did come in light. Services PMIs came in a little bit light. Consumer confidence. This is part of the reason for me with stocks. I am personally not a big fan when it comes to stocks. Part of my caution is like, if the economic growth metrics are soft and the jobs market is soft, I'm not one personally to be like, yay, we're going to get lower interest rates. To me, I'd rather see interest rates stay steady, if not move higher, with really strong earnings, economic growth, jobs market statistics, and a little bit of higher inflation. I'm fine with that. So my concern is a little bit more that like, okay, inflation did come in better than expected today, came in better than expected last time, or actually today it came in line with expectations. But that's where I think it's kind of monitoring this stuff and saying, I do think corporate earnings look really good. And I think that is a story that like you just can't fight. And I wouldn't try to. As a trend follower, like if we see earnings growth start to materially weaken, then I may be a little bit more on the cautious, if not slightly bearish side. But from a technical price action basis, the indices look strong overall. They seem to be trending higher. You've mentioned being a little bit more focused on the tech trade side of things. Is there anything you're seeing there in terms of like the Nasdaq? Do you think Nasdaq has like significant room higher for the rest of the year, or do you think that it could pull back a little bit more?
I think we'll see, like my kind of end of year is that we'll see likely new highs in the Nasdaq.
Okay.
Assuming, and it's like it's so hard to do that though, because everything is so path dependent, right? It's like there are so many different paths you can take into the end of the year that it's like you can't, it's just hard to predict, right?
It is.
Let's see. But it's, so I guess part of that is because the growth earnings are so strong, and honestly, like the tech side holds up a good portion of even the S&P, you know what I mean? So it does have a lot of weight in both indices, but I would be more concerned, honestly, in the short to medium term about some sort of a volatility spike in rates, and that causing like a flush. But assuming that the earnings obviously are still supportive of that, to me, I'd be looking to buy that dip if it happens. Like right now, I have, obviously I have long exposure in my, my long-term portfolio. So I'm not necessarily, definitely not short the market, right? I'm so neutral with my short to medium term trades. I'm very selective about them, but obviously my long-term is still long. If and when we get to that point that you were talking about, where the rates start to pull even more heavily on growth, that's, to me, that's a signal of like, all right, we're going to start trimming some of these shares positions, because if we're going into a bear market, obviously I'm not going to be long all of my shares.
Sure.
But I don't think we're quite there yet, right? Obviously we've seen growth being super resilient in the face of these higher yields. So it's to me, it's just still like a cautious time,
Yeah. One of the things that this year has been one of the more frustrating ones that I narrowly missed was kind of exactly what you're pointing out, with the idea of like, if we get some kind of shock from the Fed, some concern. And I do think that like, if you're going to get a pullback, my personal opinion right now, most likely it's going to be having to do with rates, the Fed, Kevin Warsh, et cetera. I agree with you in the sense that like, if you get some kind of a pullback, one area I like is semiconductors, but I don't like chasing them. Like I was looking at this from a 200-day moving average perspective, loved the idea of buying the dip on those. Didn't quite ever get there. We were kind of close, didn't quite pull back, but hey, we might still get that opportunity if we get another leg lower in semiconductors. Right. Like that's kind of where I'm with you on that. If you give me, hey, dollars higher, yields are spiking, people are worried about the Fed, and there's kind of a deleveraging event like we kind of saw in the last like month and a half. If we see another one of those, I generally think that from a purely a risk reward profile, I think it's a good dip to buy. Of course, as always on these streams, no one here is sharing financial advice. We're just sharing our thoughts and opinions. But yeah, I think that if you do get the further retracement in tech stocks, et cetera, I still think that data center build out rally is, I don't think it's something that is nearing an end right now. So generally speaking, yields are a concern, but if we were to get a flush or a fear event driven by them, I think it kind of creates a really nice risk reward profile. Is that kind of what you're thinking too?
100%. Yep.
Okay.
As of now, that would be a signal for me to go a lot more heavy long for sure than I am right now. How do you feel about CapEx and like the reactions to Google and the reactions to a couple of these like larger, obviously, Tesla and Google both, and along with a lot of other companies have raised their CapEx a whole lot. And then some have been good, like earnings reactions, and some have not.
Do you know when you go to a party or something and you accidentally bump into somebody who like they have a similar interest to you, and then the more you talk to them, the more you realize like, oh, you actually know this topic. I think that's happening right now, which is awesome, because asking about CapEx is like right on the ball in terms of like what matters here in this story. People they're balancing right now, feels like how much are we spending versus how much are we earning? And because we've kind of circled around the conversation around yield so much too, I think that's at play here as well. Like if you have CapEx that is expanding and the 10-year yield is moving higher, I think it's inevitable that you're going to have more, we want to see ROI right now. There's more concern about borrowing costs. You're borrowing more money in a high rates environment, or higher relative to recent history environment. So I do think CapEx is worth watching. I personally think that if you're looking at a stock like Google, for example, which I really like, and you're thinking, I love this company, it has tons of free cash flow, and then all of a sudden it goes free cash flow negative because they're spending so much on CapEx, I think you have to ask a simple question, which is, all right, let's say you run Google. Should you or should you not be pouring investment money into building out and winning on AI? Now, if the answer to that question is no, if you think like maybe we should be doing more like Apple and sitting back and letting other people spend, and we'll man the or offer the platform for it, I think both stocks, you don't necessarily have to just own one of them if you like a balance of different types of companies that are less CapEx heavy. I would generally say that I think these companies deploying capital and winning the AI thing is the right thing to do. I think you have an existential crisis if you lose the AI race as Google. I mean, there have been Google search since, the 1990s or whatever, and search could get dethroned by all this AI stuff. So Google is like, no, we're going to spend into oblivion to make sure that we stay at the forefront of AI. So it's a question of, do you think they should invest everything into AI or not? Because they're all in on it. So if you're buying the stock, you're also all in on, that side of things. So long story short, yields also are at play there. I think CapEx is something to pay attention to, but you have to know, like, you have to be on the same page with that CapEx spending if you're going to own the stock. Is that kind of what you're thinking?
Yeah. And then also it's like, I think it's a really big, like, timeline. Like, what is your timeline? That's a huge one, because this, like, the market goes through cycles, obviously. But if I was to say, I'm 100% on board with Google spending into, I won't say oblivion, but spending all this money because it's important for us to be first. And like, side tangent, which we can go back to, but if we have time, but it's like that feeds into your gold trade that you've been talking about, because the government, we have to be first. We have to beat China in this AI race. They will spend whatever they need to spend to do that. The result of that, currency debasement, gold goes up. Like, so it feeds into itself. But back to like the CapEx side, it's like, you can be doing the right thing fundamentally to, establish yourself as a leader once, this AI phase is actually like the normalized thing, like they're spending all this CapEx, and that's a good thing. But at the same time, on a shorter term basis, investors don't view it like that in the short term. They say, what is the spend? What's the return on what you're spending? Am I going to see it? And if they don't start to see it, that re-rates the share price, which would be great for, a long-term investor to say, sweet, I'm going to just buy it cheaper.
Yeah.
So it's like, there's two sides.
Yeah. I love the way you're thinking about that too, because I'm thinking, Wall Street is inherently very short-term focused, as you've pointed out. Like, they want to see that return quickly. Whereas then you have, the perspective of like, okay, just look at the underlying business. If they're thinking long-term, they, to your point, kind of have to be winning the AI race, not just from a company versus company perspective, but a country versus country perspective. It's like too big to fail to an extent where, you just have everyone who has to go all in on, winning that, because it is so powerful. The software is so, all encompassing to everything. So that's a really great point. I think that, if you are investing, if you're looking at these companies, I do think like valuations matter. Like there are a lot of really expensive names out there. So I think it kind of comes back to where we were earlier. You do have some risks. You have higher borrowing costs right now through yields. If you get that flush, know your spots, have them picked out, and then you can kind of like pick and choose, how to deploy capital where. So I'll say it, pretty much anytime Google drops by 25%, I am always looking to buy shares because it's a company that I really like and long-term believe in. So for better or for worse, I would support the CapEx spending. And if it freaks out investors and gets them to sell down the multiple on the stock significantly, then I'm kind of thrilled. I would like that. Yeah. So
I feel the same about like AMD. It's like AMD is a company that I've owned since like the hundreds. Like I think at like 160 or 150 was like my average buy or something. And I actually trimmed like half my position up here because I'm like short term, like, and that was kind of in the point where I was building up cash. And so obviously I still have exposure, but it's like I would not be upset if we pulled back a little bit further in semiconductors. But do I think it'll happen this cycle? Probably not. But when we actually do tip into a bear market, AMD is for sure one of the names that I will load up heavy on for sure.
Yeah. I love that. I love that. Picking your spots, being ready. I like to build watch lists whenever the stock market's at all-time highs, because I don't like to buy stocks, but I like to build watch lists and pick out what I want when it does go on sale eventually.
Yes.
Marilee, it was awesome speaking with you, and I hope that you come back because you are clearly very knowledgeable on the subject, and I think you bring a lot here to our show. Guys in the chat, guys and girls, we do have both now officially, both on and off camera in the chat as well. If you guys could do me a favor in the chat, just give us a thank you, Marilee, in the chat. That would be awesome. And also, for listeners who enjoyed hearing from you today, what's the best way that they can find you? I know you're on Instagram. Do you have any other platforms that you want to send to people?
Typically just Instagram. I'm really not good at social media. So
all good.
But yeah, Instagram is the best way. I do have a community, but like, my links in the bio and stuff like that. But I do, I would just say Instagram.
Okay. Yes. And let me make sure that I get that shared in the chat. I've got to pull it up, but I'll get that dropped in here. Marilee, thank you very much for coming on. And I hope that you come back, because if you're saying you're not good at social media, you did fantastic on camera. So you speak well. So thank you for being here.
Well, thank you. It's been a great time. So thanks for having me.
Awesome. Okay, guys, up next, we're going to bring in our next show host. It is Trader Tom. He's coming on for another round of FX and more in terms of setups that he's looking at now. So we'll play a quick break, and then we will have Trader Tom just after this. Thank you, guys. See you next time. If you're looking to get funded and want to save big on prop firms, check out our website, A1Trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size, and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday, we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Hi traders, Trader Tom here from Simply Forex, and I'm with you for the next 30 minutes, and we are going to look everything Forex, right? But straight away, we need to understand the reaction to the CPI. Right, and that's what I'm looking at right now, and we're just seeing US dollar weakness straight off the back. I mean, all the figures were as expected, but we're seeing some US dollar weakness, which was good for our trade, which we'll show you in a minute. And then the next place I'm going to look at is the indices, right? How are the indices taking this news? And they are bullish, and the indices are important because basically, if the indices are doing this, then Aussie dollar and New Zealand dollar, excuse my writing, I've been drinking, haven't really, but Aussie dollar and New Zealand dollar will become strong, right? And the ones that will lose are things like Japanese yen, Swiss franc, basically the flight to safeties, guys, and also the US dollar to a certain extent. And that's initially what we're seeing, right? We're seeing some Aussie dollar, New Zealand dollar strength, and we're seeing US dollar, yen weakness for sure. Okay, so like I say, if we just go to any US dollar pair, right? Look at New Zealand dollar, US dollar, it's flying. You go to any yen pair, pound yen, okay, not flying, but we've had a big reaction, right? A big push up. So that's the initial reaction, and that's what we're seeing at the moment. Now, typically, I'm not going to jump into any trades so close after the news. I'm going to let things, calm down a little bit, and we'll regather and see what's going on. But worth pointing out, we have had one trade today. So let's start there. I'll show you a couple of trades. A trade that I was in earlier and a trade that I'm interested in right now as well. But like I say, letting things calm down. And also, guys, if you've got any trading questions, any Forex pairs you want me to take a look at, or any asset really, then yeah, we can take a look, and any questions you like, guys, right? Really don't mind. So we've got Abdul coming in with Euro Aussie dollar. Okay, we'll take a look at that, Abdul, very shortly. But let's just take a look at a couple of trades, because there's things I want to show you here, right? Now, this is Aussie dollar, US dollar, and this is the hourly chart. And we have been milking this teat, right? And all we're doing is following trend, right? All we are doing is taking trades. This is the daily. So as soon as we break this level in here, right, it's a bit range bound, and then bang. As soon as we break that level in there, we are just looking for buys until we reach this level. That's it. It's as simple as that. If you break one resistance level, then we are looking to trade price to the next resistance level, right? It's as simple as that. And you can see why this is the next resistance level. Okay, and it's also looking like a 50% fib. Let's just confirm if my eyeballs are working. Okay, yeah, pretty much at the 0.5 fib, right? And this 0.5 and 0.618 level is pretty important for fibs, right? So you could potentially start seeing sellers in here. So I'm a buyer until then. Now, what's interesting here, guys, is this, right? Let's imagine you are a bit of a swing trader, right? And you saw this break, right? We got a retrace. You started putting your stops down here, and you took price up to there, right? Let's say you got a, one is to 1.5, right? Now, that would constitute one trade, right? And you would be happy with that. And people can't look at the screen every single day, right? People have got jobs, kids, responsibilities, or they're just down the pub. Now, probably not down the pub. But my point here is, guys, you could be, a bit of a swing trader here, right? Whereas an intraday trader, which is what I am, but obviously I have time to look at the charts all day, right? Not that I do. But look, you've got one trade, two trade, three trade, and we had a fourth trade today as well. All right, so you can get in and out of trades and keep adding to positions, and that's just a really good example of kind of swing trading versus intraday trading. I'm not saying one is right and one is wrong, right? You pick the strategy that suits you and your lifestyle and how much screen time you can have, but it's a very good comparison. But yeah, and why did I take this trade? Well, let me just show you guys. Very simple. Okay, so we was in an uptrend, as I've just explained, right? Price was kind of ranging here, and then we're kind of here, right? We was in an uptrend. We're getting higher lows, higher highs, okay, and we had a bullish daily candle, right? Not rocket science. And then all we do on the H4, we pinpoint levels. This was more of a H1 level. I'll enter using H4 and or H1. And you can just see there was clearly a level through here, right? We've got a bit of a bullish reaction in here, entered and took my profit here. Now, I wish I was telling you that I took partial profits, but I didn't, because CPI was coming out. Normally, I let some profits run, but today I closed 100% of this trade. Okay, why didn't someone tell me not to do that and run with partials? Normally I do, but CPI, bit of a lottery. So that was the first trade we were looking at today, and we took some profit. The next one I'm looking at is Canadian dollar Swiss franc. And I'm still looking at this, right? But I need a couple of things to happen. So if we start with the daily now, okay, again, trading with trend, right? We're in an uptrend. Okay, higher lows, higher highs. Yeah, I'm sure none of you need me to tell you about structure. But what is important here is that this candle broke, the body of the candle broke those highs, only just. So that is a continuation of trend. And then if we look left, we just need to find our target. And our target is the next piece of resistance, right? Like I showed you with Aussie dollar, US dollar, if we break this level, we're just trading to the next level. And we could be in and out several times, right? And this is what we're looking at, right? We've got a great big, well, not a great big, but bullish candle, right? In an uptrend with room to move into. Now, obviously, CPI has just come out and shook the markets up a little bit. And we do have this big bearish candle, right? But what I'm looking for now, guys, is this, right? If price comes down to this level, okay, whips out some of these lows, you can imagine the amount of stops in here, right? Some, you know, the bigger boys have grabbed their liquidity. And if we see this happen, I will buy it back up to here, take some profit. If not, let some profit run. So I'm waiting to see if that happens, guys, right? On the H1, I'm also interested to see if we close back into this level. This could also be where liquidity sits, right? You've seen all this being support, okay? We've come down, we've taken some stop losses out here. Even if we start getting a bullish candle that closes back into here, I'm also keen on buying, right? So what I'm showing you guys is technical analysis, price action, why I'm taking trades, and these pools of liquidity is what I'm looking to capitalize on. So yeah, there you go, guys. We'll keep an eye on CAD Swiss franc. Those are the only two trades that I was interested in today, right? So Aussie dollar, US dollar buy, and CAD Swiss franc buy. Right. So let's take a few of your questions now. Right, we've got, who was first? Euro, Aussie dollar. I did see Euro, Aussie dollar. FX Bashi, I'm back. Where were we? Sorry, guys. There was someone here who did ask for Euro, Aussie. There we go. Right, Abdul, Euro, Aussie dollar. Right, let's take a look at that. And let's do a top-down approach, guys. Now, I'm about to jump the gun. Let's just talk through this first, okay? Now, what are we seeing, right? So we are seeing a break of this trend line, okay? And then since we've had a break, we've just been sort of bouncing between here and here, right? So we've got this resistance here and we've got this support here, which so far has been holding. Now, I'm not interested in this until we get a break of this low, right? A break of this support, right? So why is that the case? Because if you look at the weekly, we have, right, we're in a downtrend, okay? It's worth pointing out a few other facts, right? We're in a downtrend, and this is where we're at, okay? So in a downtrend, and we've got this big bearish weekly candle, right? Whipped out all of these highs, closed back in, you know, chances are we can take it back down to these lows, right? There's still lots of pips in here. Excuse me. Been down the pub. But if we go to the daily, I've just been waiting for a break of this level, right? It was support, resistance, it's been support. So tomorrow, if this candle finishes like this, I am very much interested in selling Euro, Aussie dollar. Okay. Obviously, you know, like I said before, guys, Aussie dollar's highly correlated with the indices. If the indices are flying up, Aussie dollar is typically strong, right? Also has close links to China, and how the Chinese economy is performing affects the US dollar, right? But trade what you see. So if we get a break tomorrow, I'm really interested. Now, if that break does happen, then I'm just looking at areas to trade from, right? You can see these lows in here. You can see this previous resistance in here. So I'll be looking for a retrace, a reaction, and then I'll enter, right? Again, not rocket science, guys, right? It's just price action. Yeah, that's all it is. So there you go. Euro, Aussie dollar, Abdul. I will be very much interested if the daily candle finishes like this and selling it back down to these lows. So let's see. Right, what else are we looking at? So that was Euro, Aussie dollar. A few people wanting to look at gold. Okay, let's a lot of people talking about gold. Let's take a look at gold. Okay, and again, we're just going to do a top-down approach, right? And as always, I start with the daily. This was an old target. Let's get some of these out. Now, we are at a resistance level. Okay, fact, right? That's all I deal in. It's just I look at a chart, read the facts. So daily, you can see this has been a very good area of support and resistance. Okay, that's not me making it up. That's the chart showing you that, right? And at this level, right, as expected, you are seeing sellers come in. Right, you're seeing sellers come into this market. Now, will these sellers be sustained? Right, that's the $1 million question. We will see if we get breakdowns in structure and stuff like that, right? And we can analyze a little bit deeper. But we're in an uptrend, right? So gold has just been here, right? It's come down. It just hasn't known what to do with itself until literally a few days ago, right? Until this candle here. This gave us, I even spoke about this a few weeks ago, right? This last week, in fact, this shows us that we're going to make it to this area of resistance. Okay. And it did. Now, it really didn't give us a retrace for us to get in. Okay. Now, we're clearly in this uptrend, but do you want to start buying into resistance and a big bearish candle? And the answer is no. Right? I don't. So there's no trade here for me. I want to be with daily direction. I don't want to trade into resistance. I don't want to trade into a bearish candle. And I want to trade from value. Yeah. There's no, if I start buying here, where do you put your stop loss? Like down here? You know what I mean? I want to see a retrace, you know, perhaps how Smart River catches up and we get some value. Here I want to start buying, right? But as always, guys, there's no guarantees that price is going to retrace to here. And if it doesn't, I don't have a trade. And if price shoots off, I don't care either, right? Don't have FOMO. It's not a setup for me. So it'll be interesting to see what gold does today off the back of that CPI, right? Because gold is against the US dollar. And we've initially seen US dollar weakness, right? It'll be interesting to see what price does at these highs. Yeah, but ultimately we're in a H4 uptrend. And really at a resistance level, if we got a break of H4, right, the trade would be the retrace, but I don't want to trade against trend. So gold is at a critical level right now. Okay. If we end up getting a push through this level, right? But again, let's go back to the daily because I won't trade this today, right? Because of that bearish candle. But if today's candle ends up being bullish like this, then I'm more inclined to buy it, but there's still no value here, right? So yeah, gold is a, let's wait and see. But even if I just don't want to buy it, there's no value there. Right, what else are we looking at? Euro, New Zealand dollar. Okay, let's take a look at Euro, New Zealand dollar. Okay, so we just had a look at Euro Aussie dollar. Now, Euro New Zealand dollar is a mess. And so are a lot of New Zealand dollar pairs, right? Let me show you. So look, this is New Zealand Swiss franc. This is the daily chart, right? Look at that. Just mess. I don't want to trade that. I'll show you another one. New Zealand dollar, US dollar, right? Mess. Right? Do you want to trade that? Not really. It's looking like a bit of a flag and a pennant, right? Or whatever they're called. Doesn't matter. Yeah. But I don't want to trade that. I want a break of this. If it breaks this, winners, buyers are winners, right? We're going to come higher. If it breaks to the downside, sellers are winners, and we can look to trade it to the next area of support and resistance. But this, I don't want to trade. This is just made up of buyers and sellers, and no one's winning, right? You don't want to be in that crap. You want to be a break of this level or a break to the downside. Then the market has told you, I'm ready to be bought or I'm ready to be sold. And this goes back to my point about Euro New Zealand dollar. This is also just crappy, right? That's a technical term. Go check it out in any Forex exercise book. It's crappy, right? It is. I don't want to touch this. But again, if we get a break, right, only to the upside really, right? If we get a break to the upside, right, let's say today's candle finishes like this, then I'm interested in buying to there. Right? If we get a break to the downside, I'm still not interested because we're at a key support level. So that's, and just to show you the key support, right? So that's what I'll be waiting for. Don't try and jump in on a pair, right? Let the market tell you that it's ready to go higher or it's ready to go lower. And one of the biggest telltale signs is a break from price contraction. And that's what this is. The price is not going anywhere. Eventually, it will have to go somewhere and it will move quickly. Right? So, yeah, in fact, I love trading from these areas, right? Like New Zealand dollar, US dollar. I love trading from these once they tell me the direction, right? Because, you know, if sellers do this, buyers will give up. If buyers do this, sellers will give up. Excuse my candles. I'm a 3-year-old, right? So that is what you need to be aware of with New Zealand dollar pairs at the moment. Right, what else are we looking at? So that was Euro New Zealand dollar. Do something 77 Aussie dollar, New Zealand dollar, and Gregory wants to look at New Zealand yen. All right, guys, let's take a look at those as well. Lots of New Zealand dollar interest at the moment. Let me have a quick drink. Thirsty work, this trading. Right, what was first? Sorry, Aussie dollar, New Zealand dollar. So in our Discord, guys, we've had lots of debate about this one. But again, I'm just going to trade what the market shows me. Okay. Now, as you can see, Aussie dollar, New Zealand dollar is in a downtrend. It even broke this. This is a green candle, but it closed below these lows. So that is a lower low, right? And now we're pulling back. But so basically, I want to trade with trend. I want to sell this market. But if you just look at these candles, since we've had a nice pullback, nothing has told me to start selling. And by nothing, I mean candles, right? And daily candles. None of these have said, Tom, start selling me. And I'm glad they didn't, right? Because look at price now. But I am still an Aussie dollar, New Zealand dollar seller. But nothing's telling me to sell it yet, right? And then if we go to the weekly, you can see we broke these lows, right? So the weekly is in a downtrend as well, right? We broke these lows, big bearish candle, bullish-ish candle. But look, if we get back up to these levels, you know, if we start seeing sellers again, I'm a seller. So yeah, that's what I'll be keeping an eye out for, guys, right? So bearish candles starting to come in here. If I start seeing candles like this, right, I'm a seller. So yeah, that's what we're seeing with Aussie dollar, New Zealand dollar. Let's also look at New Zealand yen. Now, yen pairs are tricky little buggers, right? Because we've had this massive extreme move, right? The US Treasury and the BOJ, right, have got involved to, you know, give the yen strength pretty much, right? And we saw this massive yen strength in the market. Now, typically, when we have a yen intervention, you have these interventions and everyone's like, right, I'm buying it again. And that's what's happened. And that's what keeps happening. And that's the problem they're going to continually have, right? But especially if the indices keep doing this, right? Because yen's a flight to safety. But let's trade it from a technical point of view, okay? And as you can see, at this point, we are in an uptrend. I know that might seem quite extreme, but the moves are extreme. But that is the last high. This is the last low, right? Because we broke this high. And we haven't had that since. We haven't had a higher high, right? We haven't broken this last high. Therefore, this is the last low, right? And we held on to that low, and we're seeing nothing but buying pressure. Now, for that reason, yeah, I am a buyer. This is one of the unique yen pairs that is still in a daily uptrend, and I want to trade with trend. And we've got bullish candle, right? We've got potentially, let's see how today finishes. We might have a nice bottom wick. I think this is a buy trade back up to this 94 level, right? And let's take a quick look at the weekly. And a lot of these weekly charts and weekly yen pairs are still in uptrends, right? Now, ultimately, yeah, we're kind of between here and here, right? But we have got this big bullish candle that's telling us to buy as well, right? And if I just show you US dollar yen, right, on the weekly, you'll be like, right, I'm buying that. Yeah, because it's in a weekly uptrend, nice big bullish candle. Let's take it higher, right? The daily obviously is a different picture. But with New Zealand yen, the daily isn't a different picture. So if we look at the H4, it's not a buy trade for me today because the daily told me I couldn't buy it today, right? But if we end up with a candle like this, right, and I wake up in the morning and it stays like this, then yeah, I'm buying it. And then you'll find your levels, right? Now, clearly there's a level through here that price hasn't quite reached, right? But when I wake up tomorrow, I'm interested in this level and this level. If it comes back down and we get a nice bullish candle that does this, I'm a buyer. But tomorrow, not today. If price just does that, okay, I don't have a trade, no problem. Right? We get more than enough trades. There's a trade every day pretty much, right? I don't say that flippantly. I mean, because of I'm an intraday trader, right? I typically get a trade a day. I'm looking at 28 currency pairs, and one of those pairs are going to give me potentially an opportunity. Sometimes it doesn't. Okay, no trade, but typically we'll get one trade. Yeah, so that's New Zealand yen. I would buy New Zealand yen if it's set up. Right, guys, we've got euro US dollar. I've got 30 seconds. Let's do this. And guys, remember, if you enjoy my analysis, please don't forget to join my channel, Simply Forex. I'm sure the guys will put the link on the screen, so please go check it out. So the problem, euro US dollar, very quickly, right? We broke this range. We're in an uptrend, but we're at resistance, right? No trade, not interested. If I show you the weekly, yeah, we're in a downtrend. These lows were broke. We're at this level here. We're still in this downtrend, right? And we're at this resistance. If anything, that's a good sell trade, but daily is in a buy, is in an uptrend, no trade. All right, guys, I'll leave it there. Thank you very much for listening, guys, and I'll see you next week, same time.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello, hello, hello. Good morning, good evening, good afternoon, everyone. I'm back for another segment. It's so cool to see and also experience this where, like, you do your live stream segment, you take an hour break, you come back, and then you're just back at it, and the stream has just been flowing the whole time. So that's awesome. Hope you guys are doing well. If you guys want me to go over any asset classes for CPI, feel free to go ahead and just drop those into the chat. I can also talk about the CPI. We do have another inflation print tomorrow, PPI. Let's see what the analyst expectations are for that one. I'm just curious. I haven't looked at it, actually. Okay, so PPI tomorrow is supposed to actually tick up higher. So maybe that could be a conflicting read. So we'll see. But right now, market, the way it's reacting and kind of the way it's digesting this, you have a softer dollar here. You have yields lower with the 2 down 1.14%, the 10 years down 0.8%, and the dollar softening here, gold as well, just trading higher. So it's a better story for the doves out there, I would say. And then just looking at CME Fed Watch tool, this is new here. Well, not new, the tool's not new, but the new reading here was what you're seeing. You now see just one rate hike priced into the market and nothing else beyond that. So as the days progress, as the weeks progress, and as we get more new economic data, it seems like we're going from hawkish to neutral, which is something I've been very consistent with, Marco himself included as well. So it's good to see that. So CME Fed Watch probabilities, one rate hike, we'll see if that even sticks, right? I'm thinking more of a just rate hold and staying there, but we'll see what happens there. As far as CPI goes, the new read is now updated into Edgefinder, and so you can see here that we were at 4.2%, and we are now starting to see a trend lower. We are at 3.5%, now we're at 3.4%, so we're making some progression there on the inflation front. Let's see how that affected the top setups page and see if there's new opportunities or things of that nature. So let's go to neutral here. I'm going to remove some of these things. I'm going to remove crypto. I'm going to also remove the currencies like isolated. And let's just look at this top down from top to bottom. So pound dollar there, very bullish reading. Pound Kiwi, pound Swiss, very consistent with that. Like the pound basket has been really, really good. Let's just go through it again. Last time I checked, no opportunities just because the moves were already moving and there's no pullbacks, right? Similar to gold, where it's not giving you any pullbacks, so you just kind of have to sit back, relax, and watch it do its thing. Pound dollar, that is the case here. You are at a level of resistance right here, 1.3550. So we'll see if this, holds, right? If this holds as resistance, then maybe you get a pullback opportunity where you can go ahead and jump into the pound, or it just breaks, retest, continues higher, and in that case, you just have a further dollar unwind. Pound Swiss, let's go ahead and look at that one real quick. Pound Swiss, same thing, right? It's just chugging along, no pullback opportunities whatsoever. There's nothing you could really do right there. What else is on the list? I think it's Pound CAD that I saw. Pound Kiwi. Let's look at Pound Kiwi. Pound Kiwi. I didn't take this trade. What is it doing here? It's pulling back the 200. This actually could be a better position, I would say. In fact, let's go to the 4-hour time frame and let's kind of see what we're working with here. So we're having actually, this is a pretty meaningful pullback, I would say. So you tapped into this level here. What is this? Resistance here. You had some wick at the top. You're now testing back into the 200-day moving average. Let's measure this move out here. Let's go from Fibonacci retracement level. Let's do from here to here. Yeah, so you're at the 38.2. So this is actually not a bad opportunity. So I'm going to bookmark this. I'll look further, but this is actually quite nice. I like this one. So pound Kiwi, we'll keep that there on the docket. What else do we have? Pound yen. Let's look at pound yen here. Let's see. Bullish, very, very bullish. The thing with the yen, though, is that you have that kind of yen intervention thing looming in the background as well. So if you were to buy this thing and out of nowhere, right, no one can predict when Bank of Japan intervenes again, you could very easily find yourself getting a quick flash lower and taking you out. So I'm going to stay away with anything yen related. Let's see. What else do we have? Pound CAD. Pound CAD. Let's see. So again, waiting for a pullback into this level right here. We haven't quite got there yet, so maybe we see a little bit more of a flop there in pound CAD, and that could promote me to go ahead and go long. But the only one that I actually like is pound Kiwi. It's actually quite interesting. We'll see though. I'm not too overly excited right now about anything FX related. I'm pretty happy with my euro dollar long position that I have running. That's doing well, and then given the CPI that came in lower than previous, is probably going to help this trade here. So I'm looking to take that 200-day moving average as a take profit level, and we'll see what happens there. As far as the gold trade, it's doing well. It's continuing higher. I imagine that this is just one of those markets that has very shallow dips. Every dip gets bought, and you just have a continuation higher. So with this one here, I'm going to trail my stops. This seems to be like a potential level here that I'll be watching. So if I go to, I'm going to just draw this out right here. If you were to get another kind of level right here, like a break of this. So if you were to get a break retest, continue higher, then what I would do is I would just trail my stop loss even further there and just keep chugging along. That level that I'm watching here, that's at 200-day moving average. 200-day moving average as a potential ceiling. So we'll see. But I'm willing to let this thing just continue riding out and do its thing, and I'll just be riding that wave. What do I think about gold? I think gold's very bullish. Sahil, I think it's bullish. I think today only added to that bullishness. The only thing is, like, if you're not in the trade, you have to wait for some kind of a meaningful pullback. That way you're not buying at the highs, because this is a very fantastic trade. Don't get me wrong. It's nice. But like if I were hypothetically not in the trade, I would not like to buy right here. Right. I would like to wait for some kind of a discount of some sorts. So that's the only thing. And by the way, I'm very open-minded to getting stopped out, because that means I would just secure some profits and then be, riding the second wave, if you will, on any pullback opportunities. Let's see. Is there a rejection of the 200-day in Aussie Kiwi? Let's look at that. Aussie Kiwi. Where's the 200 on this thing? I think it was below, right? Yeah, Aussie Kiwi. So Aussie Kiwi was very bearish at one point, and now it's no longer bearish. I actually wouldn't want to buy this chart. So it looks really good here. I'm not gonna lie. So I was looking for a couple things. So when it was very bearish, I was looking for a break of this level of support right around here, and also a break of the 200-day moving average. We didn't get neither of those, which it's good, because that means I didn't jump the gun. And had I jumped the gun, I would have been in drawdown right now, or I would have been stopped out. But I also like this right here, what I'm seeing. Like this right here from a bearish standpoint looks quite nice. But then also too, you have recent hawkishness in RB in Australia. So I'm like, do you play the breakout, right? Break retest higher, or do you play the rejection of this to the bearish side? I don't know. I'm getting some conflicting reads, and there's no call on Edge Finder like bullish or bearish. So for that reason, I'm going to stay out of there. But I am open-minded to either or. So if we do get a bullish or bearish score on Aussie Kiwi, depending on it, I'll take it, right? So if you get a bullish score on Aussie Kiwi out of sudden, then I would look for a break, retest, and continuation higher off of this trend line. If you get a bearish reading on Edge Finder, well, then I will be looking to sell near this area with this level of resistance. But for now, you're not getting either or. So for that reason, I'm out. Let's see. Let me just verify here. Aussie Kiwi. Am I getting anything? I'm not. So it's not worth it. It's not worth it. You want to make sure that all things are aligned in sync. What trade is this? This is not a trade, but this is a potential trade, Richie. So this is a potential trade that I'm willing to take. So what I'm doing here is I'm looking at the technical levels, right? I'm looking at the technical levels. On the bearish side, you have this level of resistance here where you can possibly look to short from. On the bullish side, you could see a break retest of this trend line and then take it higher. What would cause me to enter the trade in either direction is going to be the software right here, the Edge Finder. This is basically telling me if an asset class is bullish or bearish or neutral. So that's what I'm looking for. I'm waiting for this. Basically, what this tool does is it gathers all of the economic data. You have your GDP, your retail sales, your CPI, your inflation, your interest rates data, your job market data, all of that, including sentiment and technicals. And it just computes it all together and it gives you a bullish or bearish score. So what pair is it? You're asking? Aussie Kiwi. So Aussie NZD is what I'm looking for. So you're currently short. Sluggy's currently short Aussie Kiwi with stops above previous highs. That's good, right? So like this is that bearish trend line. So basically stops above here. Pretty smart. I just don't want to make a directional call because it could really go either way. But it's a good trade nonetheless. Looks like a good one. Let's see what else we got here. BOJ Unks discovering trading. What's going on with BOJ? This would have been a pocket for Bank of Japan to go ahead and intervene here, but it seems like no. We're still kind of hanging out here near this 200-day moving average, but we'll see. Again, I'm a buyer of dips on this. So like if you get to 155 or 153, I'm looking to buy dollar yen. I could have, would have bought it right here. But at that time, you had the question like, whoa, this thing could really fall further, but it didn't. But next time, I'll be cautious of it, and I'll definitely act on it. Alan, we did look at Euro Pound on Monday. Thought it was neutral too, but still it has moved since not big. Let's look at Euro Pound. We do have UK GDP tomorrow, as you mentioned as well. Let's see, Euro Pound. Are we seeing anything there? Nothing. I would imagine a short setup on Euro Pound looks quite nice if you get some strong GDP figures for the UK. Look at that. So I remember here, I remember that we were right around here on Monday when I was talking about Euro Pound at 50% retracement level. Had I entered the trade, I would have been in some profit. Not going to lie. But again, I want to wait for that GDP number for the UK. If it comes in strong for the UK, then I could see this thing continuing lower. And at that point, I would be interested in taking the trade. But we'll see. We'll see what happens. But I hope you took the trade, my friend, and I hope that you're running in some profits. Let's see. I kind of like this too, Sluggy. Aussie dollar long. I know Marco was talking about this as well. Just not getting the pullback though. Not getting the pullback, but it looks even better now that you're seeing a trend lower in inflation in the US. So you're seeing some divergence, the same divergence that we saw earlier in the year where you had RBA being very, very hawkish and then the Fed being not so hawkish. You're starting to see that divergence there where the US is getting a case or a picture where they could justify starting to go neutral or even dovish a little bit. And you have Australia looking to be hawkish. So that's definitely helping Aussie dollar. But again, I need some kind of a pullback, and we just haven't got it just yet. But I am watching that, though. I am watching that. You could also play this intraday too. Not my thing, but I could see that being the case where you are basically buying here, like buying on the pullback here, buying on the pullback here, buying on the pullback here. If you were to get some sort of pullback, lining up with this level right here, I could justify or not justify, but I could see the case to be made on an intraday basis. But for Aussie dollar, I just prefer the swing trade route. So I would be waiting for some kind of a dip of some sort. One thing I will say here too, guys, before Marco comes and joins me, I think I forgot to say this, but Telegram channel, completely free, guys. Go ahead and join that. Free value. You have chart markups. You have bonus content. You have polls every single day. Lots of good stuff. Go ahead and join it. It's completely free. You took it, Kier. Oh, man, that's awesome. That's awesome, man. Keep riding that puppy out. And I hope that UK GDP comes in your favor, my friend, and it just continues lower. So great job on that one, Kier. I should have probably took it, though. Where's gold going? So here's the exact scenario of what gold's going to do. I actually know exactly what it's going to do. So if everyone wants to know where gold is going, watch this portion of the segment. So Marco, I see you out there, but I have to answer this question. So where's gold going? So this is the 15-minute chart of gold. This is where I think it's heading. What is going to do this? Then it's going to do this. Then it's going to go do this. But then price is going to go backwards a little bit. Then it's going to go like this. And then it's going to, you're going to see a big gap. And then you're going to see it at 4,500. What do you think, Mark? Is that accurate?
Yeah, but just the third leg, I think it's going to go a bit to the right.
A little bit to the right?
It's like 90% there. You know, I'm with you. So that's it. That's the forecast. That's the
forecast with gold.
Yeah, I think you're spot on.
For the first time ever in history, you're going to see the candlesticks go backwards. Marco, have you seen that meme of the lady that was like teaching a trading class, and the candlesticks had a weird figure? I don't know if you know what I'm talking about.
I didn't see it.
Oh man, I gotta send you that one.
To me.
I gotta send it to you.
I know there's
Gear is full porting that move.
Yeah. I know there's like seminars that are trading related, where like a bunch of people that don't know anything about trading, they come into a room and they open up the NFP or like the CPI on the screen, and then they try to trade it live, and then like if they win, if they get lucky, the whole room lights up and everyone goes crazy, and like every single person in there is losing money in the markets. So it's funny, but it's sad. So I don't know what
with the big Don Julio tequila bottle right on hand too.
Yeah.
Man, Tiger hit it right there. YouTube has the most comical material at times. What a world would it be without YouTube? Like, imagine.
Yep.
The amount of information and content and everything that we have, it's just insane.
I would need to watch like the NPC TV that my parents watch, you know, like the stupid stuff on TV that's every single day. But YouTube gives you basically real stuff. Like the reality TV shows that we saw when we were younger, that's not real. That's super fake and everything is scripted. But on YouTube, you get real people filming real life experiences, and it doesn't get more real and tangible than what you see on YouTube. That's why it's so awesome. And without it, I don't know what we would do. I wish it was a bit more open, but you can never get a perfect.
I don't know, Marco. I think the Jersey Shore was real, man. I want to believe that.
Well, except that one. The rest of the stuff was pretty shit. And you get the brain cancer on YouTube as well. If you watch Mr. Beast, you can get plenty of brain cancer. So it's still in there, but you can filter that out if you want, basically.
Yeah. Yeah, and then it's just me. It says right here, the other thing you have to watch out for is just like the AI slop, which is another layer. But Marco, we're diverging here. Okay, we started with the gold forecast, and by the way, that's a real forecast. It's price is going to go backwards in time a little bit. But are you watching anything new? CPI came in line with expectations, but nonetheless is a positive kind of way or positive direction. Where you have now you're starting to see more of a stair step to the downside on inflation in the U.S. Anything that you're watching, anything that you're looking to act on potentially?
Yeah, so I actually had a trade on for CPI. Let me show you. I forgot to share my screen, so give me 1 second to share the screen plus share window. Okay. So this was the bet. Can you see my screen?
I see it.
Okay, cool. Aussie dollar. I bought the Aussie dollar right before the event, and essentially I was betting that the forecast was for 3.4% on the Forex Factory calendar, while Polymarket, let's just go to Polymarket CPI July. Polymarket, basically not the 1 hour, the 1 day. Actually, can we put 1 month? Had at that point in time had a 47% chance that we were going to get 3.3%. So there was more volume and more activity for 3.3%. So I thought, well, maybe we get 3.3%. That would be amazing. So I bought Aussie dollar. It came in same as the forecast, closed it for break even. Looking back, I probably should have held it because I have a long-term bullish view on the Aussie dollar. So probably my mistake of closing it for break even. But the main thesis why I took this trade initially was not fulfilled. So the thesis was that the CPI goes to 3.3, which it didn't do. So I'm going to have to look for a re-entry if I'm going to be playing the Aussie dollar long. I think the dollar stays bearish. The Aussie is a nice bullish currency at the moment. You got a big repricing on the Fed watch tool. So for the next meeting, there's now only a 38.1% chance of a hike. So that got repriced. It was near 50-50 before the CPI. And it means dollar goes down more, and probably means going into the Fed, the sort of the trade that I'm looking to do will not be as powerful as I was counting on. But very important to note, the next CPI will be before the Fed. So the next CPI is already scheduled. I think we can find it on the calendar. So in September, so the 11th of September, and then you get the Fed the week after. So that CPI print is going to be much more important than this one. And that is going to be the deciding factor. It's going to be a much bigger market mover than this one, especially because if you look at the Strait of Hormuz, in July, it was briefly open. Okay, so in July, it was briefly open right here from the 1st of July to, let's say, the 7th or 8th of July, which means that's why you had a bit of a cooler print. So in August, it's going to be closed and inflation may spike back to the upside, which then will change the probabilities for the Fed watch tool, which then gives me a nice opportunity to go ahead and bet on a dovish Fed, and gives me a lot of, let's say, bang for the buck. The move can be quite big. If this before the Fed meeting is like 50-50, I'm 95% sure that they're going to hold rates. That's my edge. So that could be the trade. What do you think about it? Yeah.
I think that what we've been saying for a long time is becoming more and more true. Like, we've been on this kind of stance of like it's going to be pretty neutral, no rate hikes at all. And you're just starting to see that data come through to really start to make that case probably more realistic. I wanted to get your thoughts on Aussie dollar, for example. It's like this chart here on a daily, it's giving you no pullbacks from a swing trading perspective. But I do like the divergence that we're seeing in central banks right now, especially with the data set that we're given. Is this something, I don't do this myself, but is this something where like you could just, it seems like if you were to just buy any intraday pullback, you would do quite well following right there after? Like, is that something that you're willing to do there on Aussie dollar or no?
Not really at the moment. I think getting in right now would not be the smartest thing. So I think I'm going to have to wait for September to do something on AU. That can change. It can change tomorrow. But do I want to buy right now? No. Again, I probably should have held my long. It was a short-term trade. Again, the thesis was not fulfilled, but long-term, I have a bullish view on AU. So let's wait for the next CPI. And we're getting the August price action. If I'm being honest, the move today is minimal, very muted. I can see the activity is much, much more quiet than usual. So we're getting that August quiet price action, which doesn't really give you a lot of opportunity to buy or sell stuff.
Definitely very slow. And one point that you brought out in the past is like, usually come mid-August, September, that's when things start to come back online. You get more activity, more volume. And so it's very, very normal for this to be happening, especially in the FX market. But it seems like right now the big thing is going to be the metals. I know you trade silver. I kind of stay away from silver, but is the metals market something that you're watching or looking to participate in too? I would obviously think yes on pullbacks, but like, what does that look for? Like, for example, silver.
So my pick would be gold.
Okay,
I prefer to get into gold.
fair.
So far, no pullbacks, which is a problem. I'm not going to chase. So chasing is not a part of my plan for long-term positions. For short-term positions, it doesn't really matter much if I chase or not because I'm playing the actual event. For the long-term stuff where I really slap on the risk, I want to get a better price, a bit of a pullback, especially on gold, which looks overextended at the moment. So I thought maybe the CPI prints hawkish or prints hot. So gold pulls back, gives me the entry level. Didn't happen. So I'm going to have to look for something else. I'm going to have to be honest, if I think about it, what would be the catalyst for gold to actually pull back until September CPI or until the Fed meeting in September? I can't think of much except maybe the Middle East.
Dude, that's the same question I had too. It's like, okay, you need for example, for you to, let me go back to this one where I have my levels. If you were to have a pullback that takes you all the way at this point from here to here, which is at 4,200, that's around the 50 to 61.8% retracement level.
Yep.
What kind of a catalyst takes you there? And like for the catalyst to take you that far, then at that point the question is, well, does the trade still make sense to the long side? You know what I mean? Like,
yep.
It's like with anything, like, okay, you're getting a deep pullback, but like, what's the reason for this deep pullback, and does it disrupt the current kind of the theme there? So I'm like, also, that's a great question. And then the question then becomes thereafter, well, do you just buy on shallow pullbacks and just have tight stops and then just try to catch whatever's left of it? You know what I mean?
That's the question. And it's a great question of chasing or not chasing, because if you get in right now, you may ride it all the way to 4,700. And if you don't get in right now, you may never get a pullback. And if you do get a pullback, maybe the fundamentals completely flip. I'm willing to take that risk of not catching the uptrend, because there's most of the time there is some sort of a chance to get in on a better price on a pullback. But that's the name of the game. It's sacrificing one thing to get something else. And this is running quite nicely. Are you near the phase one target?
So this is a 200K account, so I actually need
it's a
200K.
Okay,
Yeah.
okay. I thought you were 10K. I thought the target was 10K.
We got some room to go, but it's definitely helping quite nicely. And obviously, the more it goes, the better. I actually did think of a catalyst, Marco, that could happen, that could cause gold to have some kind of a quick repricing event, but then nothing underlying fundamentally changes to the point where the trade still makes sense. It would have to be crowded positioning. Crowded positioning is something that I could see happening where you have lots of FOMO happening right here. And so you have a lot of traders trying to jump the gun here on gold. And then something comes out that ends up being false or whatever, and that gets proven to be wrong eventually. But you have some crowded positioning there, one-sidedness, weak hands get shaken out to the point where you have some kind of a meaningful retracement, and then you have some kind of a buy the dip type of situation. So I think that could be very true for gold. And that would kind of be an environment or a situation where like the fundamentals underlying don't change to the point where like you question the trade anymore. So that's actually what I'm looking at as a potential possibility for a pullback. And saying that, I'm curious to see like what the put to call ratio is on gold and stuff like that. So let's see. I mean, yeah, look at that. You have very bullish sentiment right now. So that could be something that we have to watch out for.
Yeah, you make a very good point. I completely forgot about the positioning. I think the current positioning as far as currencies go is actually kind of neutral. Dollar is pretty neutral. From what I got, like a cumulative reading, not just from the Edge Finder, but also from some other sources. So for currencies, looks like that's not the case, but for gold, as the put to call ratio is showing, could be a good case for a pullback and a nice unwind of all of the bullish calls. So I'm not hoping it happens, but it would be a good entry. It would definitely be a good entry. And I mean, if you look at the price of gold, rarely does it just go up on the daily chart without pulling back, at least to the 0.382, the 0.382 fib. So it doesn't usually just trickle up higher with minimal pullbacks. That's kind of what I'm betting to see and wanting to see.
Yeah, you have here on gold, net options flow. You're very bullish here. Not quite at the very top, but you're getting there.
Yep.
You have retail sentiment, 94% crowded gold long, which just shows that there's some one-sidedness there on that side of things. So could very well happen. That could very well happen. Max asked, is it a swing account on the FCMO? Yes, it's a swing account. And then he says, there's a guy here yesterday that said after passing, they told him they don't do 200K anymore and told him he can't have it.
Yeah, I think so as well. I think if you do pass the account, they will force you to go on a 200K regular. So the swing account is apparently removed, the 200K one, and instead of giving you 200K accounts swing type, they move you to a 200K regular account, which means higher leverage, but you can't hold over the weekend, and I think you can't hold over the news or something like that. So there's different rules. And
sneaky guys. Well, I'll have to verify that. Is that on the US offering or the global
that's
offering?
The question.
That could be different.
Yeah, probably.
I know the global doesn't have 200 anymore.
Yeah, it's probably for the global. So maybe you're safe in the US. Maybe it's a different thing, because I know it's two separate entities. It's kind of like two separate companies, if I'm being honest. So maybe you're safe. Probably good to send them an email about it. But if you
that'll be a pain in the ass, though.
Well, I've talked to their support. They're pretty good. They're pretty fast.
Okay.
At least the global support. I don't know about the US. But if the 200K is still available to buy on the website, the US website, then you're fine. And if it's not available on the global website, then you know what's up. Yeah, basically.
I'll definitely question it and send him an email. So thank you, Max, for bringing that to my attention, and thank you, Marco, too, for that.
Yeah, good point, Max.
That would suck, but okay. Nonetheless, though, this thing is, I'm gonna just let it do its thing. It is giving me a meaningful P&L, so I'll take it all day long. Marco, I wanted to one last question for you. Oil. Is it tradable, or is it simply a kind of guide to where things could be going? Like, for me, you kind of have this situation where this could be leg lower, pull back into resistance, take it lower, or this could be a breakout waiting to happen. I personally don't want to trade either of them because it's just so volatile. But I will say, if you have oil somehow find its way to 68 or 64, somewhere within here, I think that you have really strong relative value compared to price action before. And I would actually be looking to take a long attempt on that. So I would only buy it if it was very, very cheap, but I wouldn't go long or short if it's anywhere within here. But are you looking to like trade oil or anything?
Definitely not. Definitely staying away from oil, because I think it's just going to be in this range of 80 to 100, maybe even higher. If it does go to 65, that's a good buy level, especially if you don't get a decisive deal between US and Iran. If they just sort of announce a possible deal and the market sells off oil on that, I would definitely participate. That would be a textbook trade, which already did happen in July. I missed it because, again, that was the first time we got this super fake deal. But on the second time, I think I'm going to jump in, and a lot of other people are going to jump in as well. So buying that dip without a decisive written deal and everything handled and the trade fully open, is just going to go back up. So that's going to be a pretty good trade. And the interesting thing about it is Oil went to 65 or 67, whatever it is, or whatever it was. And the trade was open for only for a couple of days. So that means most of this is not actually due to the supply being constrained, but people pricing in the impact, the future impact, right? Because just the reaction can't be that quick. It was just mostly people pricing in a potential shock or less of a shock because the trade was open. And I mean, the price went down before the trade was even open. So that was pretty funny to see.
Entirely headline driven. And because of that, it makes it super tricky and unreliable because the headlines are just back and forth. So you can't rely on that unless you have True Social API. Just kidding.
Nick, please get us the API, I think, and put it into the Edge Finder and then resell it. I think that's gonna be the best approach.
That would be hilarious, man. But I'm gonna go ahead and pivot out here. Thank you for the conversation. We have another inflation read for the U.S. tomorrow, PPI. So everyone watching, this is just the first half. Okay, so everyone here, we expect to see you tomorrow with PPI because that could be entirely different and that could cause lots of reactions. So definitely be on your toes for that one. Marco, thank you for the conversation, man. And I'll see you tomorrow.
Thank you. Yeah, the PPI is usually a precursor to the CPI. So if it comes out super hot, next CPI could come out hot as well. But thank you, Alan, and I'm looking forward to speaking with you tomorrow.
All right, man. Take it easy. Bye-bye.
You too. Goodbye. So let's continue. Let me bring up my charts. Where are the charts? Found them. MacBook is great. Like, I have a MacBook now, the laptop, the Pro one, and it's awesome. It's so fast, so efficient. Battery lasts for a really long time, but windows are located when you minimize the window. It's on the bottom, and it's very easy to get lost. So Windows software was a bit better when it came to having multiple windows open at the same time, or like minimized at the same time. Just a side note. Trump is Israeli top guy trader. Okay. Can you explain to me CPI new of today, its meaning in charts? It's not a huge meaning for the longer term trends. Okay, so AUD/USD is pumping up a bit here. I would say the really important number, so I'm not going to say it's not important because it is important, but the one that's going to be even more important will happen on the 11th of September. So the next CPI print, because this one is right before the Fed. And the Fed is on the next day. Okay, so you can see the Fed is going to be on the September 16th, Wednesday. Not the next day, but the next week, sorry. That's going to be a big one. Plus, this CPI came in as the forecast, 3.4%, pretty much right on the dot. Everything came in line with the forecast, so not a big shocker. We do have the PPI tomorrow, which is the producer price index. Forecast is, let's see. Well, do we have the year-on-year here? And do we have US PPI on Polymarket, July 26? Yes, we do. It expires August 13. 81% chance that it is below 5.1%. What was the previous number? Let's open up the Edge Finder, the PPI, take a look at the dollar, 5.5. So a lower number, quite a lower number. That's not bad. But I don't know what's the forecast on the Forex Factory calendar. I don't have access to that. For the year-on-year, I have month-to-month, but not the year-on-year. Maybe I'm missing something. Maybe I need to enable this. No. I just like to focus on the red news. Yeah. Also can't run some softwares on Mac. True, yes. I had like a pirated Photoshop and Premiere Pro on my previous laptop, which was pretty nice because I saved like 50 euros per month. And now on the MacBook, that's just not possible. So I have to buy for Photoshop, and I switched to DaVinci Resolve, which is free. Plus, if you really want the paid version, it's like a one-time fee. While Adobe, they're almost like scammers. They take a lot of money every single month. Their products are kind of crap, if I'm being honest, if you compare it to competitors like the DaVinci, but I'm off track. Let's get back to the markets. We literally have a market speculator as the president. Imagine him watching charts in the White House. True. Could you explain what could have happened today? CPI, I mean the pump and dump candle. Is it the pump and dump candle? I mean, it was a pretty small candle. Not really a massive mover. So gold is up quite a lot. Well, quite a lot. 1.4%. I would say that's a lot. The dollar, pretty much nothing. Like almost break even on the day. Let me see some of my stocks. The stonks. VLO. Whoa. Okay. Let me check my interactive brokers positions. Okay. Actually looking pretty good. If you're wondering about my stock picks, I'm in RHI, which had a breakout out of this level. I am also in VLO, which had a breakout out of this level. Should have got it yesterday, but I'm usually trading around the open. And I have a buy limit on P, A, and W. So I have a buy limit on this one, which looks like it's not going to get tagged. I'm going to keep it in for now. And I have to set a reminder to remove it a bit later. But if you're trading individual stocks, the SPY is at all-time highs. The Qs are looking okay. Above the 50, above the 20, above the 10 EMA. Pretty bullish stuff. The equal weight is looking bullish, all-time highs. The mags look okay. Semiconductors still kind of struggling but recovering. Software is the leader. So you always, when there's a new cycle in the equities, in the equity market, you need to identify which sector is the leader. So the semiconductors were a leader in April. They caused the massive explosion. This time, it looks like software is the leader. Okay. I also want to mention, if you're looking to get funded, do take a look at OLA Prime. So OLA Prime, just see something. You can get 20% off with the code A1 Live. So if you're looking to get funded, 20% off on OLA Prime. OLA Prime, by the way, no consistency rule, which is a big, big plus, especially if you're a swing trader. Take a look at their Trustpilot. Whatever you do in trading, always look at the reviews because there's a lot of scammers and shady companies out there. So look at the reviews. 4.5 out of 5, 3.2K reviews, 5-star to 1-star ratio is pretty good here. Read through the reviews again and join the Discord. A1 Discord, we had some members already getting payouts from OLA Prime, so that's why we recommend them. I have 2 more minutes before I pass the show to Tiger. So Tiger says stonks. Marco, how come the Nikkei keeps going up when some markets are starting to become red? I would say equities are not red. The Nikkei actually looks pretty constructive. The Nikkei looks really, really good. Yeah. I thought the opposite thing will happen because I'm betting on a bullish Japanese yen, because the Japanese government wants to push the yen up, because we had an intervention. We had a hawkish Bank of Japan. We got the GPIF pension funds selling foreign assets and buying domestic. All of that is bullish for the yen and kind of bearish for the Nikkei. So do I want to participate? No, not really at the moment, but like most of the equities are running, the SPX, the Nasdaq, the Dow, the Russell, even the DAX, which was horrible from May to now, was horrible and starting to break out. FTSE, even the FTSE, all-time highs as far as I can tell. So when you get the leaders, which is the US, going up, usually rest of the market follows. That's just how things work. So you get the leaders first, rest of the market follows. But my favorites are still going to be the US, the SPY and the Qs, or the SPX and the Nasdaq, depending on which contract you're referring to. I'm playing it for individual stocks. So I'm forward testing a strategy in individual stocks, which I will of course present to, or put the signals out in the A1 Discord once I'm happy with the testing. If I'm happy with the testing, so far it's pretty good. You can join the A1 Discord if you want to get access to all of my positions, all of my trade ideas. And that's about it for today. Join us tomorrow. We have the PPI inflation. Thank you for watching, and have a great rest of the day. Goodbye.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
What's going on, everybody? Happy hump day. Hope you're doing wonderful out there today. Let me know what you're looking at. Tickers, all that fun stuff. We did obviously have our CPI come out earlier. Pretty much a juicy nothing burger. I mean, everything pretty well hit the expectations. Just the minor change over here on the U.S. economic heat map from 20% to 30%. I just haven't refreshed it yet. So we'll get that refreshed. And yeah, we just had the bearish box go to neutral as far as the CPI report here. So there you go. There's your 30%. And yeah. I mean, as far as the dollar-based assets themselves, you basically had a little bit of immediate, the minute that report came out, like a very, very immediate bullish push up for the dollar, for the Dixie. But then everything just got rug pulled, and now we're pretty close to, we're not too far away from where we really started the day. So a little bit of a sweep up, sweep down, take away those weak hands. And that's why I called it a juicy nothing burger, because while everything met expectations on the dot, you still got some liquidity sweeps up and down. So there's some pissed off traders out there, and we're right back where we started. So dollar yen had about a 50 pip range just within those first few seconds. But other than that, everything was fairly tame, if you ask me, just taking a look at that immediate reaction. So what do we got today, guys? Middle East, what did I put down over here? Some reports of Houthi attacks in the Red Sea. Had some U.S. military responses to that over in that region, that part of the world. So oil is obviously kind of still staying undecided as we speak. What else did I put? started digging into Claude yesterday, guys. You know, I use Grok religiously all day, every day, and I use a couple other ones, little bit Chat GPT for image creation, stuff like that. But started digging into Claude a little bit. My other company I work with, gave me a corporate account, and I got to tell you, it's pretty robust service. So started to dig into Anthropic a little more and Claude, and I don't know about you guys, what you guys' favorite AI services, but I got to say, I'm pretty impressed with it so far. Anyway, guys, I just had a couple things on here. So when that release came out, the FedWatch tool did bump up to 60. We'll just call it 62% chance of remaining capped at that 3.75% rate number on the September 16th meeting. Before that data come out, we were at 54% chance. So obviously we didn't get a big push up. That's now 2 months in a row with pretty decent CPI numbers. Now, obviously tomorrow is PPI, and then towards the end of the month is our third and most important, well, I don't want to say most important, but our third inflation reading, and that's going to be the PCE. So when you guys think inflation, those are the three items you want to look at right there. CPI, PPI is always about this time of the month, about the second week or so, and then PCE is usually towards the end of the month. So, yeah, kind of a prelude, if you will. Oftentimes you get the CPI, the PPI going one direction or the other. Oftentimes, not always, but oftentimes it kind of gives you a heads up on what the PCE might look like whenever the end of the month gets here. The Fed's favorite gauge, or was the Fed's favorite gauge. Obviously, Kevin Warsh has got his new little fetish with the trimmed mean averages, more so, I guess, than the PCE. Remains to be seen how he shakes that out a little more as his time progresses as the Fed chair. But yeah, there you go. That's inflation for you. Again, that was quite the spike in the let's remain unchanged rate number again next month when that statement comes out. So I'm sure PPI comes out tomorrow. That'll definitely affect this as well. Very dynamic, guys. This FedWatch tool from the CMEgroup.com website. I think it updates about every 15, 20, 30 minutes, something like that. So it's quite a dynamic report. It changes quite a bit throughout the day, depending on what's going on. But anyway, moving over to the setups, we got pound dollar still at the very top of the list. Now, with that with that inflation number that came out, pound dollar actually did break through the overhead supply zone. So let's go have a look at the majors over here. And as always, guys, just let me know what tickers you've got, you're looking at. Keep in mind, Nick does have his Ola Prime discount code there, A1 Live. If you go to olaprime.com, get your 20% off the account of your choice. QR code is there as well if you prefer that method. Excuse me. But with pound dollar, just to kind of regroup on things over here, since that does lead the way daily as far as moving averages, as far as trend, it is looking pretty good. Now, I would still prefer that we actually just push up a little higher to break the swing high. If I go over here to the single chart view, I would still like to see us break the swing high up here where that green line is. That's the top of my curve analysis tool. Swing high, swing low, as far as the daily, this is the daily. So that was a 1 hour time frame, but just kind of going more broadly out here. We're still within this higher time frame impulse move, the one that broke all these structure points over here, right? So everything we're doing so far is still within the range of that curve. So yes, we are a little higher on the curve, but that's why I say I prefer that we break and close above it. That'll kind of reset things a little bit. And if that's the case, then that would open up this 2 hour zone to me right here as far as possible demand bounce. Now, I still have that one that I've been watching for the last week and a half or so, the one at 1.34. Talking about the 1 hour within this daily with the red VSA candle down here hiding in the corner. But this one here is also giving us a red candle. This was, again, that Friday NFP time frame when the NFP came out, missing expectations on the dollar. The pound obviously strengthened against it. So it left in its wake a demand zone with a lot of volume, a lot of VSA. So I really like the idea of maybe taking a stab at that if we can break through all this sideways congestion that we've seen ever since. And we'll give that a shot. But yeah, projection arrow basically shows it all. as far as that green line there. Just want to see a break and close above, retrace for possible buys. So that's going to remain my favorite one. May not happen today. It's still quite a few pips away, 60, 80 pips, whatever the number is. But yeah, that's still going to remain the same. Let's see, Euro Swiss. What did I write down for Euro Swiss? Euro Swiss. I had something about Euro Swiss I was going to show you guys. Oh yeah. Let's go to a 30-minute chart on this for a second. So I've been telling you guys all the time about the confirmation entries, and there was a pretty good example that I had over here on Euro Swiss where I drew up what I want to see happen when we bounce into demand. And I know I don't know if I've talked about this too much or not, guys, but it's a good idea to see a live example from time to time. So, I drew this up back here in the past. This was towards the end of July, about saying, hey, I want to see a basing structure. I want to see a swing high liquidity sweep, swing low liquidity sweep that bounces into demand and pushes up. Well, that's exactly what we got. Exactly what we got. So we had our base, or a contraction, swing high, swing low, higher swing high above this spot, lower swing low below this spot, which bounced into the demand and did what? Okay. Started pushing up. So I just was kind of reviewing some of my zones yesterday. I thought, you know what, that might be a good example to show you guys. So, that way you don't think I'm crazy. I'm just creating stuff out of thin air. But yeah, that 15-minute time frame created that perfect little visual, I think, for you guys. But that's the whole point of this, is when we have a big, strong drop down like this, I want to see some type of slowdown to where it actually contracts for a short period of time before it starts giving us those expansion legs up and down. Okay. That sideways tornado I showed you guys an example of. Does that make sense? Sweeping liquidity each time, buy side liquidity, sell side liquidity, ultimately fall in the zone and get that push up. Okay. So I thought that'd be a good example to share with you guys, just so it makes a little more sense rather than just all the lines I draw. So hope that makes a little better visual sense for you guys. As always, if you have any thoughts or questions on that, let me know. Claude is the top AI, says tight ASAP, TIT ASAP, TYT ASAP. Yeah, I'm fine with changing things and discovering new things, but I just got so used to Grok and Chat GPT again with image creation that, hey, I figure if it ain't broke, don't fix it. But I do write up a lot of content for my other project I work on, and they were telling me that I should check it out just to see how it's got a lot more benefits. So yeah, just in messing with it yesterday, I got to say it might become my new favorite. Can you give me your volume indicator? I couldn't find it in TradingView. Yeah, absolutely. Maximilian. Yeah. So up here on indicators, if you just click on that, all you got to type in is either VSA or volume spread, volume analysis, or hold on, VSA. Yeah, volume spread for VSA, but it's called volume spread analysis is what it is. That's what the VSA stands for. And then I've got it starred, so it just automatically pops to the top. But yeah, you just click on that. The code writer, or the Pine script writer, I guess you could call him, would be this guy here, Hari Prasad. Should show 6,000 users. It's increased from 5,000 to 6,000. Well, there you go, Hari Prasanth. You're welcome, because I've been telling people they need to start digging into this a little more if you want to understand a little bit more of the volume side of things with currencies, since there's no central exchange. So, yeah, but that's it. Just click that, and you just click right here, click your little star, and it'll save it at the top of your favorites list. Okay, so that is it right there. Hope that helps. Go double check over here again. Okay. All right. So the majors. So Aussie dollar has obviously kind of spiked through the overhead supply as well. So I like this, guys. Aussie dollar, pound dollar, we've broken overhead resistance, and this makes it a little simpler to start looking for some retracements. So we broke through the daily. And just like I showed on pound dollar, I'd like to see a break of the swing high as well. Did we break it? Talking about this white line that's a little higher. We did break it. Okay. All right. So we just wicked through it. So that's good. I like that. So now that we've done that on pound dollar and Aussie dollar, now I just need to retrace to a demand zone. Now, Aussie dollar the best one I think is still going to be that zone on top of a zone clear at the bottom, because this zone's already been mitigated. This zone right here has already been mitigated. And this one just had very bad liquidity, a very bad volume. Talking about the volume spread analysis, when we dig in a little deeper, we had average candles down here. Remember, green is average, blue is below average. My legs out have to have a yellow or red candle, meaning above average or ultra high volume. So that's why this one worked out right here. And that's why we got a lift. Okay. Now, I wasn't going to take it in a million years because we still had not yet chewed through the overhead supply. Now we have. So now that we've done that, I'm going to ignore this one because it's been touched. I'm going to ignore this one because there's no real liquidity to stand out. So effort didn't really match result. I'm going to ignore this one because it's already been touched, and I have to go deeper. Okay, if I go deeper, I've got these zones all the way at the bottom. I got a 2 hour here with a gap. Here's my gap showing that demand heavily exceeded supply. It did not touch that one below. If I zoom in, there's a little bit of space between it, okay, about a pip's worth or a few pipettes worth. But then further to the left is where the 4 hour zone is with a gap. Okay, so that's it. That's the yellow projection line. That's the same one I'm going to follow. Unless we just create a brand new demand zone, get another big gap up and spike through the overhead supply that's up here. Okay. So it all just depends on if we're breaking structures, breaking supplies, and if I'm getting gaps with a lot of volume. That's the key, is a lot of volume, a lot of VSA, a lot of institutional activity, smart money activity. They're the ones creating the demand and supply zones that I like to trade. If it's a retail type demand zone like this one here, okay, where there's no volume, I skip it. I only care about what the institutions, the smart money, are creating. So anyway, that's Aussie dollar. Again, pound dollar, we just went through that. It's broken a structure. Euro dollar still trying to fight through its overhead supply. So there's nothing I can do really on euro dollar. Kiwi dollar is still in play because it has yet to touch the overhead daily. I'll just go back to a daily. Talking about this daily here. So for Kiwi dollar, this one's still in play for perhaps a little bit more aggressive of a play, going back to the July 30th demand zone that was created back here on a red volume bar, a red volume spread analysis bar. Talking about this one right down here. Red bar, leg out, gap up, broken structures. Okay. And the best part is it's creating a bunch of stop loss liquidity on the bottom side, perhaps some stop loss liquidity on the top side, which would be buy orders. Banks need sell orders and unfilled orders to bounce up. 200 EMA is also going through this region. If I kind of draw this forward a little bit, okay, price is going to have to pierce it in order to get to the zone. I like that as well. So that would be the potential play on Kiwi dollar because of, well, all those things I just listed. Volume, broken structure, gap, liquidity, sweep. Okay, so that's Kiwi dollar. And let's see, dollar CAD is still in play. Dollar Swiss, dollar yen are not in play for me. I'll get to that in a second. But dollar CAD is still the only one that is. Big gap out, VSA volumes jumping in. Former demand on a daily that is flipping. So a flip zone to supply short. That's former support becoming resistance in its own way. And that's this one here. Higher, I got to update this. That's old news there. So let's redraw this for you guys. By the way, the 200 EMA is piercing through. I like that. Did it. That's what I'm looking for. Okay. That's what I'm now. Above all, pound dollar is my favorite because it is the strongest on the top setups on Edgefinder, number one. But got a few other options here as well. Again, dollar Swiss, the reason I'm still not interested in this one is because my daily moving averages are basically hugging and making out. Okay. They're not separating. I'm not getting the alligator's mouth pushing up or down. And it's still technically in the way I see it on a daily, it's still technically in an uptrend because we have still got these swing lows down here, these white lines that have not yet been broken, while we also have higher highs. And yet it's asking us to short it. It's, I think, a -8 on the Edgefinder, if I'm right. Dollar CAD or it's moved. Okay. So that one actually adjusted with the CPI report. So it's gotten a little less weak. It's trying to come back a little. So that's yet another reason why I'm not interested in dollar Swiss. unless it starts breaking down some of these zones. Okay, so that's dollar Swiss for you, dollar yen, just to finish up the majors, and then I'll get to gold, silver, oil, all that. It's basically diddling in the middle. If I'm looking at the daily, guys, swing low, swing high. We're right in the center. Okay, that's the middle zone, the equilibrium zone. That's just not a zone I'm interested in playing in. If I'm only looking at technicals, we did bounce into a 4-hour zone. 4-hour zone, but it's a very wide range zone. We're talking like 150 pips wide. So that's why I did break it down further, just to look at where some smaller time frame supply zones are. We had the one at the very bottom, which didn't really hold a candle to. I mean, it did nothing. It just chewed right through it. Now, higher up, we do have a confluence point. But again, it's still all in the middle. And I just don't have any interest for it. So dollar yen is going to have to do a lot of work for me to have any interest in a play, whether we get a top setup play bullish or bearish on this thing. Okay. So anyway, that's the majors. Let's see what you guys got up here. Watermark. Oh, that's just my indicator. Not financial advice. Trading is high risk up here at the top. Okay. It's just our little disclaimer. Keep us safe. And that's why we verbalize it a lot, but it's also on the chart as well. In other words, trade at your own risk. We're here just to provide ideas, but not signals, especially on the live streams. I know the guys have some got some signal services as well, and they're pretty awesome, guys. I check them out from time to time. Really, really good stuff that they add on there. So if you guys are interested in something like that, it's something that they put out on their Discord channel. Just get with the team, and they can help you out with some signals if that's something you're interested in doing. Kiwi dollar 0.8 or 0.58 to 0.59. Let me see what you're talking about. 58 to 59. 58. Oh, 0.58. That's way down here. Okay. Yeah. For me, that's the play I'm looking for. 58.5, basically. But anyway, gold, silver. Gold is obviously the stronger of the two. If we're just looking at the top setups, just a refresher over here, we do have gold at +8. We do have silver at +6. And I do believe I reset that before I hopped on, but I'll just reset it anyway. I'll make sure. So I got to say I'm agreeing with what Marco said. I'm definitely gold over silver. Just because of, well, a couple things. Number one, it's a little stronger of a score, but number two, we did break one of those pretty strong looking call walls at the 400 level that was on GLD. And then, of course, we just kind of measure it out, see where the equivalents would be for those call walls over here on XAUUSD. That was basically this 30-minute supply zone that I had drawn up over here. Blue line represents where that 400 line would have been. Okay. So at this point, though, gold and silver is bounced into the zone that's highest up. So now, guys, we're dealing with the confluence of supply overhead above that 400 level. So here's our daily candle, gap down, broke structure. Okay. I have to, now that we've bounced into it, to me, that looks the strongest among any of the smaller time frame zones that I have down here. Because if we're just simply going zone to zone, if I'm looking at a daily supply, well, chances are it could take it to the next daily demand, which is all the way down here. Okay. That would be my daily demand. But if price breaks through, well, then that'll free up some of these smaller time frame items that I have right here and right here. So a week and a half, 2 weeks ago, whatever it was, I did draw up this 2-hour demand for you guys. That's the main one I'm after because this one did not have good volume at all. Okay. At all. This effort, in my opinion, did not match result. When you look at the base and candle, for crying out loud, that was the between time for the intraday session from Thursday to Friday of last week. So obviously there's just not a lot of volume during that time, guys. It's the market crossover. So while we did get a big move up, the volume just wasn't there. So that's why I'm just not interested in that particular zone, even though I drew it up just for visual sake. Okay, I still like to draw up zones, even though I know I'm not going to trade them, just to show some examples that, hey, I'm not going to go for every zone. I only want the institutional ones. And I identify an institutional zone as a zone where the volume picks up on the way out. So that's why I'm sticking with this one here. And somebody on one of my other streams asked me about the 4,200 level on gold. Well, so I drew a line to see what they were talking about. They were talking about this swing high from back here in the past. Okay. So they were talking about a possible buy. Well, something I just thought I would share with you guys as well, just something to think about. Okay. Again, not financial advice, just sharing with you what I'm thinking of. If I'm a bank, if I'm smart money and I'm trying to layer in an order on this, well, if price comes down to that 4,200 level, that former resistance becomes support. This is what I like to see. I like to see when those lines are above my demand zones or if they're below my supply zones. Because what I see is if I'm a bank, if I can just redo this for you guys, if price comes down, well, yeah, there are going to be a lot of people that buy just because it hit the former resistance to become support, no doubt. So if I'm a bank, what I like to do, what I like to see is let's make them feel good about themselves for a little bit. And in the process, they have to put their stop losses somewhere, right? Somewhere down here, give or take the size of it, the range of it. But the point is they're going to be putting their stop losses in below for their protective stops. So if I'm a bank, I see that as free liquidity. If I need to have a little more liquidity, let's say I want to accumulate a little more. I only accumulated partial position. I've got a much larger position. I can't limit order the whole thing. I can't market order the whole thing because it'll fly up and give me a disgusting fill. So in order for me to kind of cheat the system or take advantage of the system, well, then I would want to just kind of do a little bit of a sweep, a little bit of a rug pull, drop price, take up those stop losses, which are sell orders, to fuel more of my buy orders, and then ultimately drop into the demand zone where the unfilled order potential lays to finish your order, add more to your order or finish your order, whatever the case is for that possible buy. Does that make sense, guys? They seem to understand. They liked the way I explained that the first time. So give me an amen or give me a yes or give me a no or something if that makes sense. The point is, it's just a kind of a cheap way to take advantage of some more liquidity to fuel more of your orders to go the opposite way. This is why I say a lot of times we pick the right location. We get into a trade, we get stopped out, but then price goes in our favor. So we're left with making the right decision, but timing it poorly. Okay. It's annoying when that happens. It used to happen to me more than you know back early on. And that's when I just started to kind of slowly figure out the way the chart works a little bit as far as liquidity and trying to think like a bank. I mean, Nick says it a lot. We have to think like a bank in situations like this. So for me as a demand zone trader, I want to see that up. I want to see that liquidity manipulation. Okay, that's where it starts turning into more of a confirmation entry. If we're magnified down, we're on a 1 hour, but if we go to a 15-minute, a 10-minute, right? When price comes down to that zone, it's obviously going to look, not exactly like this, but that's where I want to start seeing the price do this, because when price enters, let's just do this. When price enters that zone, I want to look for that break of structure side, which is a change of character on this particular leg, creates my new bullish impulse leg. And I still don't want to necessarily buy the breakout. I still want to wait on that newly created demand zone that oftentimes will create itself to buy here. Okay. So that's the magnified version of it. Going down from the, from the intermediate time frame down to the lower time frame. Okay. So that's just something I thought it would be important to kind of show you guys, just so you can kind of start thinking for yourselves as a bank. And if I just need a little more liquidity, a few more stop losses to fuel more of my buy orders, well, that's a way to play the system, because they have the power to manipulate price. They're the ones that push price around. Okay? We just have to figure out a way to latch on and take a ride. Let's see what you guys got. I got a few minutes. Palladium, platinum. Ooh, Nerdy wrote it. I like the name. Gosh, I haven't looked at a platinum chart since the last time you guys asked me about 3 months ago. What is that? XCU? Is that XCU? USD? What is that? Oh, that's copper. I'm sorry. Palladium or platinum. Let's just do platinum. I can type that in. That might give it to me. Forex. Yeah, I don't know. Give me the ticker on that. Or we just look at this one just for example's sake. Yeah, real quick answer to that. Congestion. We did swing high. Look, I would look for a swing low. Okay, I don't know if this is the correct ticker or not, but yeah, you got sideways congestion going on right here, guys. If that's the proper one, swing high, swing low, find a demand at the bottom. There's still some work that needs to be done on it. That was just the cash side. So let me see. Euro dollar. Euro dollar. I mentioned that one up front. I do believe I did. Yeah, just real quick on that. I still need to break structure or retrace all the way down here. Okay, there's two options. This is the better discount if we just get a bounce from the daily supply all the way down to this demand down here. And in fact, that's going to be the only one. That's the only one I'm interested in, unless we break structure and regroup and make a new demand. If we come down here and make a demand somewhere, that might open up something different. But we got to break structure first. Guys, my time is already done. My goodness. Bull trap, yeah, anytime you get, yeah, exactly, Ember. Yeah, when you bounce into overhead supplies, it can often be bull traps. Right? So that's why we got to break through it, which can create another bull trap before the banks do what? Rug pull, push price, force price down to their cheaper demand zone and fulfill their order to the long side. All right, ladies and gents, that's all the time I got for the day. Hope you learned something. If you guys have any questions on that further, master pattern, accumulation, distribution, Wyckoff, okay, if you have any more questions, feel free to throw them in tomorrow. But other than that, we'll be back tomorrow for PPI to see if we get something other than a juicy nothing burger and add to the inflation picture. And we'll take a look at the Fed Watch tool at that point, see if anything changes after that report before PCE at the end of the month. So take care, so long, trade safe, and have a good day.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.